terms of this commitment to going green, greener energy. I was at a BNEF conference with Alex Steele last week in New York, and a lot of the energy companies were there, and they're talking about the investments they're making and things like that. How do investors feel about the investments that these energy companies are making in their traditional fossil fuels versus maybe some of the newer technologies?
Yeah, I still think we're in the early stages. Exxon talked about direct air capture and gray versus green hydrogen. You're still going to need a significant amount of civic support, government support for these projects. Occidental seems to be more further along in terms of direct air capture. Exxon talked about that. Exxon continues to talk about it, but I think we're still somewhat a ways from using it as a mechanism in our models for a fundamental change in the makeup of these entities. It's still going to be about upstream extraction and cracking the molecules and putting them into the system, into the broader.
All right, Vince, thanks so much. Appreciate it. Vince Piazza, Senior Equity Analyst covering the oil and gas space for Bloomberg Intelligence. There again, we had a couple of the big companies report earnings here, ExxonMobil and Chevron. ExxonMobil stock down about 3.8% today, but up about 17% year to date. Chevron down about 1% today, but up about 10% year to date. And again, a lot of these companies are balancing their investments in some of their traditional fossil fuels, which clearly, it's been shown most recently with the Russian invasion of Ukraine, how important it is to have ready access to those types of energy sources. But at the same time, making investments in cleaner energy so that each company has to balance that. S&P 500 up 1%, the NASDAQ up 2%. Again, the tech earnings kind of taking the day. We're going to have more coming up. This is Bloomberg. Good morning.
headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Microsoft and Google owner Alphabet crushed Wall Street estimates with their latest quarterly results. Both tech giants got a lift from a surge in cloud revenue, and that was fueled by AI services. Bloomberg's Kriti Gupta.
I think Mandeep Singh over at Bloomberg Intelligence often makes a great point that a lot of kind of corporate America, international corporates even haven't fully invested in cloud. So there's a lot of run room to begin with on the cloud business, even though it's been around for a decade or so. Add on the AI story, and there's still a lot of growth ahead, and that's the message coming out of both Microsoft and Alphabet.
And Microsoft up about 2%, Google up 10%. But its Snap shares really surging this morning. They're up 23%. Social media company reported first quarter results that beat estimates. Meanwhile, shares of Intel, well, they're falling down 10% after a lackluster forecast. And from big tech to big oil, shares of ExxonMobil falling. They're down 4% after a disappointing first quarter performance. Bloomberg's David Wethy has the breakdown.
If you really had to point to just one thing, it might be the refinery maintenance schedule that was a little bit more heavy, that sort of dragged down the results. And sometimes that can be hard for analysts to predict. But then there's also some non-cash charges that also were hard for the analysts to model. And so that drove a lot of the miss.
Well, shares of Chevron, they're also lower. Chevron down nearly 1% after it incurred higher than expected capital spending, caused free cash flow to miss expectations by $900 million. Then also in earnings, we have AbbVie lifted its full year profit guidance. Newer anti-inflammatory treatments, well, they made up for its Humira losses. AbbVie is down about 3%. And finally, there's been an update on that proposed takeover in the mining industry. Anglo American, well, it's rejected BHP's $39 billion takeover offer. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, some green on the screen out there. The S&P 500 up 1.1%. The NASDAQ up 2.1%. Yields pulling back. The 10-year Treasury, it's off down. Yields pulling back 5 basis points, 4.65%. WTI crude oil a little bit lower, $83.50. And gold about flattish here, $2,330 per ounce for oil. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Emily, and Lisa. President Trump is back in court for his Manhattan criminal trial. Before entering the courtroom, Trump complained about it being cold in the court.
For one purpose, I believe. They don't seem to be able to get the temperature up. It shouldn't be that complicated, but we have a freezing courthouse, and that's fine. That's just fine. Let them keep handing it out.
Former National Enquirer publisher David Pecker is back on the stand. Yesterday, he detailed how the Enquirer bought the story of former Playboy model Karen McDougal's alleged sexual relationship with Trump before the 2016 election and quashed it, a tactic known as catch and kill. Tensions are rising as pro-Palestinian demonstrations continue across college campuses in the country. USC announced it is canceling its main graduation ceremony. Graduating students are reacting.
I want to reverse this, yeah. I don't want my family to have to deal with that. My family won't be joining, and that's okay. It's just because this is not the ceremony. This isn't the sentiment, nor the feelings that we want to have at commencement.
USC's main stage graduation traditionally brings 65,000 students and their loved ones on campus. Meanwhile, a tent encampment has been set up at New York's City College, joining the protests underway at Columbia and New York University. Secretary of State Antony Blinken has met with Chinese President Xi Jinping. Blinken stressed that it is important to manage the differences between the two countries over bilateral, regional, and global issues.
I encourage China to use its influence to discourage Iran and its proxies from expanding the conflict in the Middle East, and to press Pyongyang to end its dangerous behavior and engage in dialogue.
Blinken highlighted progress in bilateral cooperation in military communications, narcotics, and AI. Round 2 of the NFL Draft is tonight in Detroit. Last night, quarterback Caleb Williams went off the board #1 overall to the Bears. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Emily, and now John.
All right, Michael Barr, thank you so much. We appreciate that. Emily Gaffrey and Paul Sweeney here in our Bloomberg Interactive Broker Studio. At the top of the hour, we're going to bring you a Bloomberg Television simulcast. Intel CEO Pat Gelsinger, he's going to speak with Bloomberg Technology anchors Ed Ludlow Caroline Hyde, following the company that reported earnings last night. Stocks trading off 10.5% here today. A big move down. The stock's down 37% year to date. Just looking at the Bloomberg reporting here, Intel, the biggest maker of personal computer processors, tumbled the most in almost 4 years on Friday after giving a lackluster forecast for the current period, indicating that it's still struggling to return to the top tier of the chip industry. Sales in the quarter will be about $13 billion, the company said in a statement Thursday. That compares with an average analyst estimate of $13.6 billion, according to data compiled by Bloomberg. Profit will be about 10 cents a share minus certain items versus a projection of 24 cents. So continued struggles for Intel at a time when other chip makers think NVIDIA, AMD are really reaping the benefit of the AI, the demand for AI chips.
Exactly. You'd think that all chip makers would be up this year, but actually Intel's one of the weakest performers in the Philadelphia Stock Exchange Semiconductor Index. It just hasn't been able to capture the demand for AI.
Yeah, it's interesting. It's just, you think about those chips just at the moment for Intel apparently aren't really what some of these, the buyers are looking for these large language models, and that's been a challenge for the company to try to get into that game in a bigger way and try to get some exposure to that fast-growing part of the tech stack. We're going to have, again, Pat Gelsinger, the CEO of Intel, just in moments to kind of give the update for the company. But again, stock down 10% here on the really weak forecast, both from a revenue perspective and an EPS perspective. Again, you put that against some of the other ones that have performed so well really over the past 12 to 18 months. Intel still playing catch up there in the world of chips. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to start it off strong, as I said, with a simulcast Bloomberg Television with Intel CEO Pat Gelsinger speaking with Bloomberg technology anchors Ed Ludlow and Caroline Hyde. So that'll be a must-listen, must-watch. We're also going to talk municipal bonds with Eric Kazaski of Bloomberg Intelligence because it is Friday, and we talk muni bonds. And then Anna Rathblum, CIO at CBiz Investment Advisory Service, will come on and discuss the latest views of these markets. But right now, let's go to John Tucker for a Bloomberg Business Flash. John.
All right. Hi, guys. Happy Friday. This Bloomberg Business Flash being brought to you by BNY Mellon Insight. June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Stocks getting the tech lift today. You have 6 of the 11 major industry groups in the S&P 500 higher right now. The gainers, communication services and information technology, and that's home to Google parent Alphabet. The shares there, they are up over 10%. Microsoft, those shares up 2.5%. The message they delivered to investors from their earnings report after the close of regular trading, the spending on artificial intelligence and cloud computing, well, that's paying off. And at Wedbush Securities, the senior analyst there, Dan Ives, says, you know, it's tough to get a bet against AI at this point.
This is a pretty unique dynamic we're seeing, not only in terms of the demand side, whether it's NVIDIA or AMD, they're just breathtaking reacceleration, but also on the demand side for the actual products, not just building, but what we saw with Google Cloud and Azure.
Well, the tech earnings overshadowing the economic data, the Fed's preferred gauge of underlying inflation rising at a brisk pace in March, and that reinforces concerns of persistent price pressures that are likely to delay interest rate cuts from the Federal Reserve. S&P 500 of 59 points right now. That's up 1.2%. We're at 5107 on the index. The Dow is up 147 points. The Nasdaq Composite Index up 348 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele, who's on holiday today. She'll be back Monday. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can see the live video stream at youtube.com and search Bloomberg Podcast. Emily, so coming up in just moments, Pat Gelsinger, the CEO of Intel, will be joining Bloomberg Television. We'll bring that to our listeners and viewers as well. Just looking at the year-to-date performance of some of these chip names, again, Intel down 37%. Compared to Broadcom, up 20%, Qualcomm up 14%, and then, of course, NVIDIA up 76%. So the market's really saying we want less exposure to maybe the slower growth PC business where Intel has historically had its market share versus the large language learning machines, the big companies, the Googles, the Amazons, the folks that are buying those chips.
Yeah, and the street is pretty bearish on Intel. We're seeing 33 holds, only 11 buys. So people kind of backing away from this stock.
Again, this is a huge company, $130 billion of market cap. You kind of wonder how long, if at all, it will take this company to kind of pivot and try to get more exposure to some of those large language models and some of the AI.
Earnings were pretty rough too. The revenue miss, EPS forecast miss, revenue forecast miss. So I'll be interested to see what Pat Gelsinger has to say on this.
Yep, absolutely. We'll bring that to you in just moments. Just a quick market check. S&P up 1.2%. The NASDAQ up 2.2%. Again, NASDAQ trading higher on the back of some of the tech earnings we saw coming out of Microsoft and Google. They were talking about their investments in the cloud and how the cloud and AI is actually driving their results in real time. So that's the other side of this tech equation. On the one side, you have the users, the buyers, and on the other side, you have the chip producers like Intel. So right now, let's set us up. We're going to go to Pat Gelsinger. He is the CEO of Intel, and he's going to sit down with Ed Ludlow, Caroline Hyde of Bloomberg. Let's listen in right now.
We welcome now our Bloomberg TV and radio audiences worldwide, and joining us is the Intel CEO, Pat Gelsinger. Pat, good morning to you, and thank you for your time. You know, the stock is down more than 10%, and we're kind of here again, right, where there's the short term and the long term where you're trying to convince investors of a return to technology leadership and also grow a foundry business. Have you an updated timeline on when you think you will achieve that target?
Yeah, thanks, Ed. And obviously, hey, we delivered a solid Q1, right? We met on revenue. We, beat on earnings, a bit tepid in the first half, as we said, but we see a lot of, improvement as we go through the year. And with that, obviously, the foundry business, as I would say, we're going to see progress on the foundry business every quarter from now to the end of the decade. It just gets better and better as we move into our new technologies. As we've said, getting back to process leadership, which have better ASPs, and we can build better products with them. We win more external foundry customers as our scale grows. And we're also get past this period where we had to invest to catch up, right, and create the capacity for a decade plus of underinvestment. So everything there becomes a tailwind going forward, and we hit key milestones. And one of those I was very proud of. Just this week, we went to production with our first server part on Intel 3. The U.S. is back to leadership process technology being manufactured on our shores for the first time in a decade. So some key milestones, and I'll just say everything is coming together, as we would say, and we're very optimistic that, yes, in fact, we will deliver the foundry business and the manufacturing capabilities as we've laid out for the company, the industry, and the world.
Stifel, interestingly, analysts over there, 2024 should mark the bottom in many aspects, Pat. But they really want to understand the pace of the climb that is necessary. How can you tell us about how quickly you'll be able to scale back that market share that you've so far lost?
Yeah, and we look at Intel now in these two different perspectives. Intel products, and we expose through our recast financials that we have a very solid fabless business with healthy financials, and we expect those to improve over time. But the big story has been about exposing the foundry financials and the losses associated with those. And what we see is over the decade, that will cross through profitability in the middle of the period for that business as we get back to process leadership and start to moderate the level of investment required to go rebuild that decade of underinvestment. And as we do that, if we would have that today, we'd be more than double the earnings this year that we're forecasting. So it becomes a huge positive lever for us. And as I like to say, all of that's in our control. The wafers, getting back to leadership, the product implications of it, all of these things are our control. And it gets better as we win additional external foundry customers.
The link, I think, Pat, is about growing market share of server to support the costs necessary for the foundry business. You were asked an interesting question on the call in the context of servers built on x86 versus ARM-based alternatives. And you gave a pretty thorough explanation about the place of all of those particular data center CPUs. But what I didn't hear was what's happening out there in the real world. Where are data centers being built and what are they being built on right now?
Yeah, and this is important because we've been in the period now for a number of quarters where data center CPUs have been fairly tepid. And we do see that improving. We had good improvement in the first quarter of the year, and we expect that to continue through the year. And, there's time for refresh in those data centers. But we're also seeing that the CPUs now as head nodes for AI use cases, we posted some pretty incredible results that we can now run 70 billion parameter models natively on the CPU. I don't need a special accelerator. I can do everything on the software stack that I already use inside of data centers. And we're seeing that these power efficient products that we're bringing to the marketplace, such as our Xeon 6 that we just announced, are going to enable us to stabilize and regain market share. With much higher core counts, the ASPs are going up very nicely on that through the year. So we saw growth in Q1. We expect that to continue through the year. And as we get to the back half of the year, our accelerator product line with Gaudi, Xeon plus Gaudi, we believe becomes a very compelling solution for enterprise customers. And we had quite a number of announcements of those this quarter. Customers such as Bosch and Dell and Supermicro, all bringing those into the marketplace. Roche and IBM and key cloud partners like Naver, the fastest growing cloud provider in Asia, all of those coming alongside the Intel strategy. So we see that momentum building, Ed.
Momentum, and we want to just remind us that we are with TV radio audiences, the CEO of Intel, Pat Gelsinger. Pat, on the momentum, everyone wants to talk about AI in all of its ways and means. You've been focusing in on an AI PC, and I'm just really interested in, ultimately, you're going to be, shipping in excess of originally 40 million AI PC CPUs. That's a target for 2024. But what's the demand like at the moment, Pat? And what's the cost like?
Yeah, and when we announced the category at the end of last year, Carolyn, it was sort of like everybody said, wow, what's going on? The AI PC, and you're seeing a flurry of interest of other people coming into that market. But Intel, unquestionably the leader, first to declare the market, first to describe the use cases, and our first product, Core Ultra, is having a very robust ramp into the marketplace. And to some degree, I'm racing to catch up to the demand. We're meeting all of our supply commitments, but not all of the upside requests yet, that we're getting from customers. So this is very robust. We expect that we'll exceed the 40 million units this year. We'll be introducing our next generation product in the middle of this year. So all of these pieces, we are very optimistic. And you're seeing use cases and, communications where all of a sudden I get summarization, contextualization, translation in real time, all running on my PC. Developers, gamers, all of these use cases are now becoming AI enabled, and Intel leading the AI PC parade. It's a very exciting time for what I believe will be the biggest cycle of PC refresh and expansion that we've seen in likely decades.
Pat, this is a conversation about your technology and about ultimately your fundamentals of a business. I'm just going to take a turn for a moment, and it's a sensitive question, so I'll give you a moment to think about it. But given your relationship with Israel and the fact that you are one of the largest employers over there, how are you currently feeling about students in the United States protesting against endowments being invested in companies that are associated with Israel at this moment?
Well, we have been in Israel for 40 years now, and it's been an incredible country for us, incredible innovators, and extraordinary resilience by the Israeli people. And they continue, despite the challenges of the war that's going on there, to deliver against their objectives. So we're very committed to support our teams wherever they are in the world. That said, hey, we seek peace, and we've been clearly emphasizing that we need to find routes of sustainable peace in the region, and have been supporting perspectives that reinforce that across the region. And as we look across the world, we say, boy, there continues to be the turbulence, and fundamentally our strategy is around building globally resilient supply chains that are balanced across the world. So our core strategy is emphasizing that there will be these challenges across the world, whether that's in Israel, Ukraine, or Asia, and we are committed to making sure that we can support, the global markets that we serve, right, with a strategy that really was built for a turbulent world.
Pat, let's end on AI accelerators. Gaudi is on track for 500 million this year. AMD's MI300X will probably do 3.5 billion, and NVIDIA, with its generations, will do 40 billion. You've said that choice is important, and also the CPU is important, and I accept that. Many share it. But do you see a clear path where the numbers I just outlined rebalance in your favor in the AI accelerator market going forward?
Given the strength that we saw at our Vision event that we had 20 plus customers coming out publicly in support of our accelerator and our Xeon Plus accelerator strategy. We're really starting to see that pipeline of activity convert, Ed. And ultimately, much of the activity that you've seen so far on generative AI has been in cloud training. And now, and I think the ultimate monetization of AI happens as business deployments start to occur. And those are the areas that we see strength. We launched the open platform for enterprise AI. How do we enable these use cases inside of the enterprise, but in an open architecture that many get to participate in? We announced the open AI networking, from closed proprietary networking to standard Ethernet-based scale-up and scale-out networking. We announced that this quarter, and obviously the momentum that we're seeing with Gaudi, all of that $500 million, almost all of it's in the second half of the year, so you can see a very accelerated cycle. A lot of enthusiasm for Gaudi. The unquestioned leader in TCO, total cost of ownership for enterprises, building on the Xeon franchise and the position that we have in the enterprise, and literally ISVs and cloud providers, but most importantly, enterprise customers seeing that value proposition. Yeah, we feel like we're gaining a lot of momentum now in this category and feel good about the potential for our AI everywhere, AI PC, AI Edge, AI Enterprise, and AI Cloud.
Ending on an optimistic note, we thank you so much, Intel CEO Pat Gelsinger there on all things AI, all things Intel numbers. Meanwhile, let's just keep...
All right, that was Caroline Hyde and Ed Ludlow, Bloomberg Technology, speaking with Pat Gelsinger, the CEO of Intel. And again, that stock's down about 10% here today, down 37% year to date. Disappointing results and guidance here. Again, that company having a tough time transitioning, in trying to get exposure to the AI market as some of their peers have. So we'll keep an eye on that. Your beat, Emily Grafeo, ETFs.
ETFs.
Talk about it, growth business. I mean, where's the money going to these days? What are you guys seeing?
Well, one of the areas of growth in the ETF market is actually coming from legacy mutual fund companies converting their mutual funds into ETFs. So actually, a couple days ago, we saw BlackRock file to convert, and obviously BlackRock is the biggest ETF issuer, but companies that have those mutual funds, they're going to be filing for about $700 million worth of their mutual funds and transitioning them into ETFs.
Is that just because it's cheaper for their customers, and maybe or it's just that this is what the customers want?
This is what the customers want. They want the benefits of the ETF. It doesn't work if you have a mutual fund that a lot of retirees are holding in their 401ks, because that market is still, it's pretty difficult technologically to hold an ETF in a retirement account. But for these funds that aren't held in those accounts, and the BlackRocks or the T. Rowe's of the world know that a lot of the holders are just in their brokerage accounts, they've been converting to ETFs because it's cheaper, easier to manage.
Yeah, it's just amazing. I mean, when I was on the sell side, I mean, you had to make a pilgrimage, 2, 3, 4 times a year to Boston to see all the big mutual funds, the Putnams, the Wellingtons, the Fidelities, of course. Now, all the money, it seems like the vast majority of money is going more to ETFs
The
versus
flows,
mutual funds.
yeah. If you look at a chart every year of the inflows into ETFs and outflows into mutual funds.
Yeah, just extraordinary. And again, it's presumably, I guess, arguably or inarguably better for customers in many ways, not the least of which is lower cost, lower fees to consumers. S&P 500, it's up about 0.9%. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The AI-driven rally continues for stocks. So all the major averages are higher right now. The S&P 500, 47 points higher. That's up about 1%. We're at 5,095 on the index. The Dow Jones Industrial Average, 65 points higher. And the NASDAQ Composite Index up 303 points. That's up close to 2% at this point. In the S&P 500, you have 5 of the 11 major industry groups. They are higher right now, being led by technology, communication services, and information technology. And of course, that is home to stocks like Google parent Alphabet. Those shares up 9.6%. after their results, after the close of trading yesterday, and then we see shares of Microsoft also after their earnings report yesterday, up 2.5% right now. And we also had economic data, but that seems to be taking a back seat to the earnings reports. The Fed's preferred measure of inflation rising at a brisk pace in March, providing the central bank reason to refrain from cutting interest rates. The betting is now one interest rate cut in 2024 this year, and maybe not until November or December after the election. And of course, Fed officials meeting next week in Washington. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by Build America Mutual. Build America Mutual insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM, insured bonds. There you go.
Come on,
Thank
Emily.
you.
Bam.
There you go. Got to do it.
That was a little weak.
That was a little weak. We'll work on that. Eric Kozatsky joins us here. He's the senior municipal bond strategist for Bloomberg Intelligence. Hey, Eric, talk to us here. We've had rates kind of moving around here. We had some higher rates earlier. Talk to us about what's happening in the municipal bond market vis-a-vis kind of the Treasury market here.
Yeah, absolutely. Well, there's two ways you can really look at it, right? We can focus on total returns, which certainly aren't that great, or you could look at it as a buying opportunity, right? Yields are up 30 basis points on the month, about 55, 60 basis points on the year. Certainly not near where we were last fall, but certainly an interesting opportunity to come back into the market and, get those 4%, 5% higher premium structures at cheaper dollar prices. And that's ultimately what people want to be doing when they're building portfolios.
If you run ETF Go on the terminal, I'm bringing ETFs into this, Paul.
Yeah, let's do it.
You can see that over the last year, when you scan for municipal bond ETFs, $16 billion of inflows into those funds. Does that make sense to you that we're seeing this much money kind of pour into this strategy right now?
Yeah, absolutely, right? So anytime you have a cheap beta strategy that has gotten a lot of attention in the news, not only what we're saying on the Bloomberg side, but externally, there's going to be more attention focused on that from wealth advisors and retail clients, and that's why you're seeing those flows go in there. But just to kind of keep it in context, from a notional standpoint, 16 billion flows in a $4 trillion market, it's not really that big of a deal. It seems impactful sort of looking at it in a vacuum, but when you look at a total muni market, still a very small piece.
Hey, Eric, I want to ask you about this Brightline deal, this railroad deal.
Yeah.
Talk to us about, I know they came to market recently. What is Brightline and what was the deal they brought to market?
Yeah, so obviously they have a train system down in Florida. Right now it's going from, Palm Beach area down to Miami. They're extending it up to Orlando. It's a high yield deal. There was two portions of the deal. One was triple B. There was a non-rated portion. Part of it was a refunding. Look, it's still a speculative project. Will people use the train? What will ridership be? A lot of questions that nobody really seems to have answers for. But I will say, look, I'm definitely jealous. I wasn't able to get any of those bonds, right? If you look at sort of where they came on the non-rated portion, you're talking about 12% tax-exempt yields. On a tax equivalent yield basis, it's like 18%, right? So obviously a lot of risk and a lot of compensation being demanded for the risk being taken.
And how was that deal welcomed by the marketplace in terms of demand?
Very oversubscribed. And that really sort of speaks to the dearth of high yield issuance that we're seeing in the marketplace and also the returns that we're seeing in high yield munis as well. So we started off the conversation talking about IG total returns, which are down almost like 2% on the year, but high yield munis are positive, right? They're really the only green portion of the screen I can look at when I look at IN Go and looking for munis. So there is obviously a lot of interest, both retail and institutional, in high yield credit and looking for deals that have some hair to them.
You have a note out. It says, muni tourists who dabble casually in the municipal bond market are being bombarded with calls to come back to what has been a treacherous place so far in 2024. What kind of market outlook does an investor have to have if there's someone who was a muni tourist and now they're going to come back into this space?
I think a lot of people got scared last year because they found out that their bond portfolios could have losses. And I think that's something a lot of investors probably hadn't seen before. So there was probably some reticence there. And then there's a lot of excitement as last year ended where rates were rallying, right? And munis turned out to be a great buy. They're still a great buy from a risk-adjusted, purchase standpoint, because they have much lower default risk than corporate credits. But, there is probably a reticence to sort of dive back in, knowing that the Fed really doesn't have a firm control of where inflation is right now and when and if they're going to cut. But like I said to Paul, if you can come in and you can buy those 5% coupons at a lower dollar price, I think it's a more interesting opportunity right now.
So, Eric, what's the credit risk profile of the municipal bond space? I know historically it's generally been pretty darn good. Are we seeing any cracks out there?
No, not as of yet. I mean, if you look at just the Bloomberg Muni Index, it's average AA credit quality. And that really sort of spans the gamut. You have some BBB rated credits in there and some AAA rated credits, right? Just the average is AA. I will say that from a rating agency standpoint, we're not really seeing any cracks, but they're also very backwards looking in that they're looking at audits from last year. Everything's on a very big lag. We're actually working on a new sentiment monitor over on our side on BI. And what we're showing just on a predictive standpoint is that things should be worsening or at least softening a little bit when it comes to municipal credit in the next 12 to 24 months, right? We've seen a very large uptick in headlines talking about layoffs from the state and local government sector, as well as budget cuts and budget deficits. So something we want to keep our eye on.
How should investors be thinking about picking where in the market they want to invest? I'm going to bring this back to ETFs, but obviously you can buy a muni ETF that's going to track a number of different regions of a specific, state in the U.S. Is that the better bet, or should people be kind of maybe zeroing in on a specific state right now?
Well, I think it goes back to the argument of passive versus active management. And I think in a sloppier market like we're seeing now, when yields are higher and there's a lot more volatility, the case for active management can really be made. You talk about those ETFs that are getting the flows, they're passive structures. So if you look at what they're actually investing in, they're missing about 30% of the muni market by credit exposure. They're not buying higher education, they're not buying hospitals, they're not buying natural gas bonds or bonds subject to AMT. So all of sort of the higher alpha areas that we've seen over the last several months, they're missing out on. So that is an opportunity that you would find more on the active sector, but you're going to be paying more for a management fee for that. So if it was me, I'd probably be looking more toward active management right now in this market.
All right, Eric, thanks so much for joining us. Eric Kozatsky, Senior Municipal Strategist for Bloomberg Intelligence, joining us from the Princeton, New Jersey offices of BI in Princeton. So let's take it back to ETFs. Where are you, Emily, seeing some of the interest? Like I thought most... I guess what I've learned over the last years, it's not just buying the S&P 500 index or something like that. There's a lot of thematic ETFs out there, like all the time, and incredibly creative. Double leverage, Tesla, long or short, and all these crazy things.
Yeah, well, I just wrote about a new ETF. It's coming from a Midwestern ETF issuer called Calamos, but they have been an options manager for over 30 years. This is an ETF that has 100% downside protection. It caps the upside of the exposure. So you get S&P 500 returns up to a cap of 9.6%, but you don't lose any money on the downside. You have to hold it for a year, though, and you have to buy it on the first day that it launches, which is going to be May 1st. So I'm seeing a lot more of these issuers coming out and just basically trying to come up with a product that hasn't existed before, whether it's something that's good for yield-seeking investors, people who want income. But a lot of the times buying bonds is maybe a better bet, a safer bet.
Well, I mean, I know Eric Balchunas, who covers ETFs broadly for Bloomberg Intelligence, he was recently at a conference, and he was surprised a lot of registered investment advisors still are not on board fully with ETFs, and that's another source of growth. I guess when they become a little bit more accepted or normalized in the marketplace, more people will own them.
Yeah.
And the retail component will.
I mean, they have been around for over 30 years. Last year.
Why haven't we talked about it until, I don't know, 5 years ago?
Yeah, the asset growth has really we've seen exponential growth.
Right.
Now we're looking at an over $8 trillion market in the U.S. compared to just 5 years ago. It was a lot less. So I think we're coming around to that, but I do still speak to a lot of RIAs who are still doing, or ETF issuers, who are still doing ETF 101 to RIAs because they're just so used to buying mutual funds. And their clients are older.
Right. Yep. That's a good point. I mean, I'm thinking about my account. I can't imagine I own that many ETFs. I mean, but all your 401ks, they're all in
mutual funds.
In mutual funds, so maybe that's a little bit of an issue. But again, it's a huge part of the business. You cover it along with others on the part of BN. Eric Balchunas and his team cover it on the part of Bloomberg Intelligence, and that spot Bitcoin ETF was big, and that was a big story for not just the Bitcoin people, but for the ETF people as well. Quick data check here: S&P 500 up, let's call it 1%, holding on to those gains. The Nasdaq up just about 2% here, 15,900 on your Nasdaq. Yields coming in slightly. 10-year Treasury in 4 basis points, 4.66%. WTI crude oil up about 50 cents, just above $84 per barrel, and gold a little bit higher, $2,300 per ounce. Bitcoin, it's down 2%, 63,500. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Emily, and John. Police crackdowns on college campuses nationwide have led to arrests and universities calling off commencement. Bloomberg's Amy Morris has the latest.
The University of Southern California canceled its main commencement ceremony, citing safety concerns. Other schools have rewritten their rules to ban encampments and moved final exams to new locations. This after hundreds of students on campuses across the country have been arrested as they take part in a nationwide movement from Columbia to Harvard, Berkeley, New York University, Yale, North Carolina, Illinois, Texas, George Washington University, and American University. The students are demanding schools cut financial ties to Israel and divest from companies enabling the conflict. They also want universities to drop charges against pro-Palestinian student organizers. In Washington, Amy Morris, Bloomberg Radio.
The fallout continues after the reversal in the Harvey Weinstein case. The New York Court of Appeals overturned his 2020 conviction for sexual assault. The conviction was a landmark event in the Me Too movement. Actress Caitlin Dulaney was not involved in the case, but accused Weinstein of sexually assaulting her in a hotel room in 1996. She was shocked by the decision.
While this is a setback, all of us who work in this field are still moving forward and do believe that change will happen.
Weinstein remains at a prison near Albany, still behind bars, for a sexual assault conviction in Los Angeles in 2022. Testimony continues today at former President Trump's hush money trial in New York, with former National Enquirer publisher David Pecker back on the stand. Right now, the case and trial is in a break. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss this essential event for the financial advice community. Visit insight.bnymellon.com. Well, it's an AI-inspired rally in stocks today. Technology driving the push higher after their blowout earnings. You had Alphabet shares, they're up over 9%, close to 10% right now. Microsoft shares up 2.5%. But you know what? The best performing stock in the S&P 500 actually belongs to ResMed. Those shares are up 16%. Analysts boosting their price target on the maker of breathing machines after the first quarter profit topped expectations. Meantime, Troy Gajewski of FS Investment Solutions has this view of the stock market.
I mean, mega cap tech just continues to crush it on basically every angle. And so I'm very sympathetic to the argument now, given the market cap constituency, that multiples should be more permanently elevated around that 20 number. So we'd expect more volatility going forward.
And some of the oil majors reporting. You have ExxonMobil shares after their results disappointed. They are down right now. XOM down 3.4%. And after the data this morning, the Fed's preferred inflation data coming a little hotter than what we had expected. That's kind of taken a back seat to the rest of the markets. And in fact, the yields are lower. 2-year is down 1 basis point, 498. And the betting now is that we're not going to get a rate cut from the Federal Reserve until maybe November or December. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate that. Emily Garfeo sitting in for Alex Steele here today. Alex will be back on Monday. I'm Paul Sweeney, and we are live on our Bloomberg Interactive Broker Studio. We're streaming live as well on YouTube, so you can head over to youtube.com and search Bloomberg Podcast here. As John was mentioning, this market is moving higher. We had some PCE data today. The month-on-month at 0.3 kind of came in line with expectation, but the annualized number a tick higher. But again, strong tech earnings kind of driving this market here. Maybe a little bit of relief that the inflation data didn't come in even hotter, maybe 0.4% or 0.5% on a month-to-month basis here. Anna Rothbun joins us here, Chief Investment Officer at CBIZ Investment Advisory Services. Anna, thanks so much for joining us here. Boy, a busy, busy week in terms of economic data, earnings data. Tie it all up together for us. And how has your market perception changed, if at all?
Good morning. My market perception hasn't really changed. We expected this week to be a very interesting and busy week. If you think about the market cap of the companies that are leading the S&P 500, those were the ones that were reporting this week. So it was going to move the markets up or down and definitely affect the beta of the market and the sentiment. And that's what we're seeing today. We saw that yesterday. I don't think it changes the general feel of the market's feeling like it's overbought. So I don't think it changes the dynamics. The PCE certainly could have had a bit bigger impact on the markets today, but it really didn't. So I think it's pretty much the same old, a little bit of a difference today with Alphabet.
Anna, do you think that the macro is getting maybe more confusing? Because like we were talking about, John Tucker was saying, the PCE data came in a little bit hotter, but we're seeing Treasury yields down. Earlier this week, we had Bill Gross saying that he was bearish on tech, avoid tech. Now we have the NASDAQ up about 2%. What is going on? Is it getting harder for experts like you to kind of discern, what's really driving this market?
Well, so it's been hard for a while, so I don't think it has become hard. So in terms of PCE, frankly, it is hotter. The year-over number is a little bit hotter than expected, but it's actually in line with what the Fed has forecast back in March. By the end of this year, the Fed is expecting 2.6% in core PCE. We were year-over-year around 2.8, and that was a March figure, right? So we have a lot of room. Anything can happen between now and December. So I think we can be patient on that. I think the market's reflecting that. With regards to tech, I think tech right now, especially big tech, they're at a sweet spot between development of AI, and they're not betting the farm on it. They're just incubating it somewhere deep inside of their company while they're still, while they're still able to churn cash, right? And so Google or Alphabet signaling a dividend, I think that's a signal. So I think that it's the sweet spot of AI and cash flow and quality earnings. I think tech still has some room to run, certainly notwithstanding the volatility that may come. But over the long run, I don't think it's necessarily a place to run away from.
So, Anna, we've had, I guess, about 45% of the S&P 500 report their earnings as of today. Any takeaways for you here? How's corporate America doing?
Well, the corporate America is not doing as well as the big tech companies might imply, right? So if you think about the three companies, Microsoft, Meta, and Alphabet, I mean, together they have returned what, year-over-year earnings growth of more than 60%. That is definitely skewing the earnings growth profile of the S&P 500 index in general. So, I mean, what do people say? S&P 495, or that would be 497, right? So I think that the rest of the markets, they're still lagging. I believe as of the end of last Friday, that was the last number I actually looked at for the entire index. If you're looking at 495 stocks outside of some tech stocks, we're looking at year-over-year earning growth that was a little bit on the negative side in terms of expectations. Hopefully, we will beat those expectations for the second half of the earnings season, but it's certainly not looking all that stellar.
When you look at the month of April, we have the S&P 500 SPY ETF down about 3%. We have TLT, which is an ETF that tracks long-term treasury bonds, down 6%. Where are you going for protection when it seems like that traditional stock bond correlation hasn't really been serving investors for protection?
Yeah, and that's been true for a while now, and it's been really tough for people who are 60-40, 50-50, you name it. I think you have to be actively protecting, especially with fixed income, which traditionally has been a hedge against equity beta. Lately, it hasn't been, right? Lately, meaning the last 2 years. That's a long time. I think you still have to be mindful of duration, because even if the Fed, PCE came in relatively in line with expectations, and the markets are sort of thinking, okay, maybe the Fed can be on track. 3 rate cuts is still a bit high, in my opinion. They may be doing 2, maybe down to 1, depending how the data runs between now and the end of the year. So I think duration, you still have to be a bit careful. But look, the total yield profile is very delicious. It's yummy. So I think clipping coupons and being aware of duration is what you have to do with your fixed income portfolio.
So, I mean, that's a great point. I wanted to just get on the fixed income story here. Do I sit in my 2-year treasury at close to 5%, or do I take some credit risk here?
So high yield, I mean, when I think of lower duration profile than your traditional fixed income benchmark, which is the AG, and then, of course, clipping high coupons, I think of high yield, right? High yield is sitting at duration a little bit less than 4 years. And I think the last time I checked the total yield for the Bloomberg High Yield Index is around, just under 8%, nearly 8%. I mean, that's a really, if you think about, yield versus duration risk, that's actually not a bad risk-reward ratio. And frankly, high yield, if you stay in the higher credit profile, it's not a bad deal, right? So rate hikes, I'm not saying that, everything is the tide that lifts all boats, not like that at all. If you want to utilize active managers to really look for quality balance sheet, I think that could also work as well. But that yield can actually, if there is a spread widening, can go a long way to protecting on the downside in terms of price action.
All right, Anna, thank you so much for joining us, as always. Anna Rathbun, she is the Chief Investment Officer at CBIZ Investment Advisory Services, joining us from Cleveland, Ohio via that Zoom thing here. So we're still holding on to these gains here in the morning, Emily. Again, earnings kind of driving the story here with the S&P up 1%, but the NASDAQ up more than 2%.
Tech really leading the way.
Yep, so that's generally been the driver for these markets really for the last it seems like 15 years, tech has been driving these equity markets in both directions. We saw in 2022 how it could take them down as well here. S&P 500 up 1%. Yields, we're looking at 4.98 on the 2-year. How about that? This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker, the newsroom. We look at some of the company stories we're following. Let's start off with OpenAI. Sam Altman of OpenAI, and also the chief executives of NVIDIA, Microsoft, and Alphabet, among technology industry leaders joining a new federal advisory board. This is focused on the secure use of artificial intelligence within U.S. critical infrastructure. So this is the Biden administration's latest effort to fill a regulatory vacuum over the rapidly proliferating technology. The AI Safety and Security Board, part of a government push to protect the economy, public health, and vital industries from being harmed by AI-powered threats. It's going to develop, among other things, recommendations for power grid operators, transportation service providers, and manufacturing plants in case everything starts to go haywire. Poultry producers like Tyson Foods will be required to bring salmonella bacteria in certain chicken products to very low levels to help prevent food poisoning. This comes under a final rule issued today by the agriculture officials in the U.S. Now, when the regulation takes effect in 2025, salmonella will be considered an adulterant. This is a contaminant that can cause foodborne illnesses when it's detected above certain levels in frozen, breaded, and stuffed raw chicken products. And Whirlpool is struggling to sell large appliances, so they're hoping you're going to pay big appliance prices for high-end espresso machines. The company launching new KitchenAid automatic espresso makers this month in the U.S. They cost as much as $2,000. Sales of coffee makers boomed during the pandemic years as lockdown consumers try to make fancy drinks in their own homes. Pandemic's over. I don't think anybody told Whirlpool that. Anyway, that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets here. I'm going to do this for Tom Keene. I'm looking at the Japanese yen. It is off 1.2%. We're at 157.56, raising really the question over the weekend. Are the Japanese Bank of Japan and Japanese officials going to step in and support the yen? Big weakness in the yen. Call that out for Tom Keene. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Emily, and John. Defense lawyers in Donald Trump's hush money criminal trial are seeking to dig into a former tabloid publisher's accounts of how he worked to protect the Republicans' 2016 presidential campaign. David Pecker returned to the witness stand for the fourth day as defense attorneys try to poke holes in the testimony of the former National Enquirer publisher. The prosecution's first witness has described helping bury embarrassing stories Trump feared would hurt his campaign. Before entering the courtroom today, Trump told reporters he believes Thursday went very well for the defense.
The case should be over, but you'll have to make that determination. I think we have a judge that will never allow this case to be over in a positive way. He's highly conflicted, the most highly conflicted judge I've ever seen.
Trump denies any wrongdoing. The Supreme Court is indicating it could drag out former President Donald Trump's immunity claims as Special Counsel Jack Smith hopes to put him on trial for election interference before the November election. Brown University political science chair Wendy Schiller says the justices appeared conflicted after oral arguments.
Because there are some circumstances where you don't want to limit the president in office to making decisions that they fear they'll be prosecuted for later. You know, you think of war crimes really as that kind of prosecution. On the other hand, there are clear intents from the founders about what they don't want presidents to do, you know, espionage, betraying the country, bribery. And the question is, you can't really give the president blanket immunity, but how do you give him operating immunity?
Wendy Schiller on Bloomberg Daybreak. The court might not rule on those questions until late June, or it could send the case back to a lower court for further review. Secretary of State Antony Blinken met with Chinese President Xi Jinping, working to stabilize relations between the two countries. Blinken urged China to stop supporting Russia in its war in Ukraine. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Emily, John.
All right, Michael Barr, thank you so much. We appreciate it. All right, Emily, here's a story for Matt Miller. I'm sure he's listening. Porsche's profit plummeted during the first quarter for the weakest results since the listing in September 2022. After model changeovers and soft demand in China weighed, operating profit declined 30% to 1.28 billion euros, the Volkswagen brand said Friday, with reticent consumers in China adding to struggles for vehicles to clear customs in the U.S. Porsche had marked the start of the year as a likely low point, with 4 revamped models giving the 911 makeover a boost from the second half. So after working through lineup upgrades, including the electric Macan and Cayenne SUVs, Porsche, quote, will hit the ground running, Chief Financial Officer said in a statement.
So this is because Matt Miller has been not buying Porsches.
I guess. I mean, he's been a loyal Porsche owner, I believe, for a while. Like, so, John, you remember this. He had a Porsche in the U.S., and then we sent him over to Germany to be in the Berlin bureau. He took his Porsche from the U.S., put it on a ship, took it over, fine, lived there for 6 years, drove his Porsche on the Autobahn, probably got a bunch of tickets, who knows. And
no,
then
you
when
can go as fast as you want on the Autobahn,
that's
right?
exactly right. So then when he got brought back to New York, he says, oh, I'll ship it back. But during that time frame, shipping rates had gone up like a gajillion %, and it was too expensive.
Here, let me, for all of you, take out the world's smallest violin for Matt.
So now I think, so he's got the, I don't know what the heck he's driving these days, but he's always got something posting to his social media. So anyway, if you're Porsche, you're definitely one of those luxury brands, whether it's a Swiss watch or a German car that depends in fairly large part on the Chinese consumer and the Chinese, for a variety of reasons.
Slumping 24% to only 16 1,000 vehicles.
All right.
16,000 vehicles.
Yeah, I'm not in the Porsche market, so it's not that big of a deal for me.
I'm not either.
Balance, Emily, thank you very much for helping us out today. Balance of Power with Joe Matthew from Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
And 3 makes a trend. Welcome to the fastest show in politics. As the latest reading on inflation makes it 3 straight months above targets, pushing out expectation for Fed rate hikes even further. We're going to talk about the political implications, what it means for Joe Biden and the administration coming up with Bloomberg's Gregory Cordy. The U.S. beginning construction of the temporary pier to deliver aid to Gaza. We'll talk about the risks involved with Dave Harden from Georgetown Strategy Group. A fascinating conversation about what's happening in this project right now outside of Gaza. The U.S. beginning construction as Donald Trump gets back to court today, and we're waiting for a ruling on his gag order. June Grasso will have more on that. And we'll have analysis from our signature panel. Jeannie Shanzano, Rick Davis, all after we take a look at Wall Street. For that, we turn to John Tucker in New York. Hey, John.
And, wow, a lot of optimism today, despite those numbers you were just previewing. 7 of the 11 major industry groups in the S&P 500 show, they are higher right now. Communication services, that's Alphabet, and information technology, that's Microsoft. They are the leaders. And by the way, it's worth noting Alphabet is in an exclusive club now, a market cap of $2 trillion. That's trillion with a T, dollars. Energy proving to be the biggest drag. This comes after the disappointing earnings results from ExxonMobil as well as Chevron. Over at Wedbush Securities, senior analyst Dan Ives says it is tough to bet against tech and artificial intelligence.
This was a drop-the-mic moment for AI, from Alphabet, from Microsoft. This 1995 moment is just starting. And that's why I think the bears for tech continue to go in their caves into hibernation mode.
Well, right now, the S&P 500, 50 points higher. That's up 1%. We're at 5,098 on the index. Dow Jones Industrial Average up 150 points. The tech-heavy NASDAQ 100, 275 points higher. That is up 1.6% right now. Let's go over those. I mean, it was after the close of regular trading yesterday, but the results still giving a lift to Microsoft. That's up 2.7%. Alphabet, Google's parent, they're up 9.8% right now. And to the economic data today, this is kind of taking a back seat to the earnings. The Fed's preferred measure of inflation rising at a brisk pace in March, providing the Fed reason to refrain from cutting rates anytime soon. And of course, Fed officials meeting next week. The 2-year yield actually lower, down 1 basis point. That's at 4.98. 10-year yield, that's down 3 basis points. That right now 4.67. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Balance of Power continues. Joe Matthew, happy Friday.
Oh, it's you as well. Welcome to the threshold of the weekend. John Tucker, I guess, so is this all baked in, John? Do we understand that? Saw these numbers this morning. I thought, oh, we're really in for it now after yesterday's sell-off, or is it just the glare of Microsoft and Google that has the market high?
Well, it's the glare of artificial intelligence, everything AI, and we're always looking for evidence that, this is the real thing. The numbers backing up because they're making a lot of money, the people who supply all this stuff. So,
how true. And like you said yesterday, even as Facebook Meta was falling, NVIDIA is rising because Meta's spending so much money on AI chips.
That's where they're spending the money. Right.
Yep. Thanks for being here. We'll check back with John Tucker, of course, in a moment at World Headquarters in New York. Meanwhile, here at the Outpost in Washington, we did make it to the end of the week, an interesting one here with the PCE data. Not really interesting, the word I'm sure the White House is using as it looks at this repeated reminder. Now, 3 months in the making, PCE hotter than they wish, pushing back expectations for Fed rate cuts, of course, one of which Joe Biden himself predicted by the end of the year. The headline on the terminal: inflation data reinforced Powell's shift toward higher for longer. So you can come up with your own theory as to why stocks are higher, but it's not lifting moods in the Biden campaign. As I turn to another headline on the terminal from our friend Gregory Cordy: inflation overshadowing U.S. economic resilience, hurting Biden. And he's with us right now. Gregory Cordy here in Washington. Good to see you, sir. This is sort of the ultimate good news is bad news story, isn't it?
Yeah, so we're having this sort of soft landing, but it's such a soft landing that it's sort of excruciating to watch the economy grow a little slower than expected, while inflation remains a little higher than expected. And it's really put President Joe Biden in this sort of vice where the economy is betwixt and between. And when people get conflicting signals about the economy, they tend to be negative about it. The uncertainty is bad for markets, and it's bad for voters who want to kind of see the light at the end of the tunnel, and they're not quite seeing it by the end of this year.
Well, that's right, and that means, potentially higher for longer, which is a problem for a lot of people for a lot of reasons. When they're borrowing money, it certainly has an impact on the housing market here. Young people asking for a break when it comes to debt. Joe Biden, as I mentioned, predicted a rate cut. And I know that, the White House constantly defers, doesn't want to talk about the Fed, and we try. Jared Bernstein will be on later. Don't tell him, I'll probably try. But they've got to have their own dot plot inside the West Wing, just like they do in the Biden campaign. And they were banking on that, not just a soft landing, but to be able to say, hey, we licked inflation. And that's starting to look out of reach.
Yeah, one of the biggest problems is that the second quarter of an election year, so right about now, is when voters tend to kind of solidify their opinions about the economy that they take with them to November. The perception always lags the reality. So if the reality is uncertain now, what's it going to be in November? Sure. And if you're a Biden campaign, you want some good news, not just by November. You want it pretty soon so that people have the time to really digest that news and feel it by the time they go into the voting booth in November.
In the meantime, we tend to talk about not economic data, but the political campaign. They do have an opportunity for the next 6 to 8 weeks. The other guy is locked in a courtroom. To what extent can Joe Biden leverage that? He's been certainly traveling a lot more to reinforce the split screen.
Yeah, it's really interesting because Biden has been, and we remember this from 2020, a bit of a homebody. Remember the basement campaign? Yeah. And incumbent presidents tend to wage the Rose Garden campaign, do a lot of official announcements, but stay at the White House. And really, the amount that President Biden is traveling now, you have to think that it's a deliberate response to the fact that Trump can't travel and taking advantage of that. He's in not just going to swing states, but he's in New York this week. He's doing media. He's doing not just the sort of campaign thing, but he's trying to project a very sort of energetic presidency.
Yeah. We should mention the fact that, and for our satellite radio listeners on another channel, he's doing a sit-down interview with Howard Stern today.
Yeah, just concluded. It was an hour and 13 minutes, no commercial interruptions, because that's the way they do it on Howard Stern.
That's a dive.
And it was a deep dive into his life story, his loss of his wife, the loss of his son,
Does
Beau.
this help him?
Very emotional interview. Yeah. It's part of this I'm old enough to remember this Arsenio strategy. Remember when
Where's
Bill
the
Clinton
saxophone?
went on the Arsenio Hall show, and everybody at the time said, you can't do that.
Oh, that was a big thing. Yeah.
That's there's rules of political decorum, and you have to do interviews with professional journalists.
Now they're announcing campaigns on late night television.
Exactly, and so Howard Stern has an audience that does not overlap entirely with the Bloomberg audience, right? There is an overlap set that Venn diagram, but it's not exactly the same audience. And so he's trying to get the listeners who might not pay attention to politics. And Stern was a very friendly interview. It's interesting because he enjoyed a very cozy rapport with Trump for decades.
Absolutely, which he now regrets. Isn't that interesting? Great to see you. Come back more often, Gregory Cordy, and find the story Inflation Overshadowing Economic Resilience. Not what they want to be reading, but likely are this weekend in the Biden White House. Then again, he's got a comedy routine tomorrow night, trying to keep it light. It's the White House Correspondents' Dinner weekend, and I'm sure on Monday we'll be playing tape of some of the routine. I'm Joe Matthew in Washington. Glad you're with us today on Balance of Power here on Bloomberg Radio, on the satellite, and on YouTube, where you can find us right now. Search Bloomberg Global News and find our live feed. One of the other top stories that we're following today, because we've heard so much little about it, is the beginning of construction of this temporary pier, the floating pier to bring humanitarian aid to Gaza. We've got news today in the Washington Post, a fascinating write-up, not only on the fact that this has begun, but it's already becoming a target, or at least one that militants would like to make a target. They launched mortars at Israeli forces in Gaza, according to the Post, as those forces prepared for the arrival of goods. The attack on this marshalling area did not cause damage to the U.S. because we're building all of this outside of mortar range, hundreds of yards off the coast. But the Pentagon's talking about this already. Pat Ryder making it very clear that the risks are high. Security analysts have been talking about any number of threats: speedboats packed with explosives, divers swimming with mines, and then, of course, incoming rockets. All of this could become a very real problem when they need to connect the bridge, the pier, to land. And it's something we wanted to talk about with David Harden. He's managing director at Georgetown Strategy Group, former USAID mission director to the West Bank and Gaza. He knows about this firsthand, former senior advisor to President Obama, special envoy for Middle East peace. David, it's great to see you. Thank you for coming to talk to us today on Bloomberg. Is this going to be a major story, and in a bad way, in a couple of weeks when this temporary pier is within range?
It could be. I mean, it could be. But I like the pier, and I may be one of the few humanitarians or one of the few military strategists who does. What we ultimately need to do, and just look at this from an economics perspective, what needs to happen is that all crossings need to be open as much as possible on a most predictable basis with as much food flooding the market as possible. If you are able to open multiple entry points, then no one entry point is that particularly important. And so, first and foremost, the land crossings need to work. They need to work more robustly. And that would be in the north areas and Kerem Shalom in the south, and then Rafah on the Egyptian border. But if you were able to also get a pier going in, then you might actually be able to flood the zone with more food, more basic commodities, lowering the price, lowering the risk, lowering the chaos. But it's true, the pier is a potential target.
Of course, ill-conceived from the start is how Senator Roger Wicker, Senate Armed Service Committee's ranking member here, this is becoming a political issue. To what extent will its success resonate here in Washington, its success or not on a political level?
I mean, clearly a failure is going to accrue to Biden, just like a success would. I disagree, though, with the notion that it's an ill-conceived idea. I mean, I like it for another for a geopolitical reason, which is, look, facts on the ground matter in the Middle East, and the Israelis are masters at having facts on the ground, whether it's settlements or checkpoints or roads in the West Bank or whatever. The Palestinians never get facts on the ground. Putting a pier that would take basic commodities, that would allow for basic commodity imports, is a fact in their favor. The Israelis control that maritime zone. So let's be real crystal clear about that. They've controlled it for the last 15 years, and they've been able to lock it down. That doesn't mean that there couldn't be an attack. Of course there could. But back to my bigger point, right? If there are more crossings, and again, let's talk about land crossings, then no one particular access point is that important. So if the pier is the only way to get basic commodities in, it's going to be attacked. If the pier is one of 5 different ways of getting basic commodities in, it doesn't matter so much.
What's your worry right now, Dave, when you see headlines like Israel stepping up cross-border strikes on Hezbollah to the north, the early stages, it seems, of an invasion of Rafah? What is it that keeps you up at night right now when we're in such a tenuous moment in our relationship with Israel?
Yeah, I mean, the Israeli-Iranian play seems to have stabilized for the moment, okay, and that's good. I mean, you should expect continued Hezbollah strikes. The thing that really deeply worries me is the famine risk. And, and that would include an attack on Rafah that just exacerbates the humanitarian catastrophe. The Israelis are great at saying, well, we've killed 13,000 Hamas fighters. We're ahead of the game. And there's only 4 battalions left in Rafah. That all may be true, and it also may be immaterial. Because what we don't know is maybe they've killed 13,000 Hamas fighters, but 50,000 people have lined up to join. And perhaps they're not as trained, or they're not as sophisticated, but the pipeline is open. That very well could be the case. Further, I think the Israelis have really lost in the PR war. And so, look, Hamas is a terrorist organization, and they have killed Americans. And yet, for right or wrong, and in a sense it doesn't matter for this point, for right or wrong, the American college campuses are ablaze with Hamas supporters. Now, just goes to show you that after more than 6 months of fighting, the Israelis may not have degraded the elements of Hamas sufficiently enough to defeat them, and they may never do that. And so when you add in the risk of famine, which I think the administration has already said is ongoing, then you're just looking at generations of grievances, and the sons and the grandsons and the daughters and the granddaughters of the current fighters are going to be fighting again. And none of this accrues to the U.S. benefit.
Dave, I only have a minute left. If you were still in your role as a senior advisor to the president, would you tell him to address these young people on campuses directly?
I mean, the election is pretty profound for America, and it's important that, in my view, that Gaza is put in the context of a whole array of issues that are consuming America at the moment. And, he's not going to win in a debate on, at Columbia, for sure. But to engage and to understand and to understand the legitimate aspirations of the Palestinian people too, right? I mean, we could be on the wrong side. Let's be clear about this. The Palestinians are going to get a state. We just blocked them in the UN. Are we going to block them forever? Because this will propel terrorism, and it's a fundamental risk to his election campaign. So yeah, I think he's really facing kind of an ambiguity, a strategic ambiguity with no clear path forward. And I feel like he's at pretty profound risk geopolitically, national security wise, domestically, and
David, I'm sorry I don't have more time for you. David Harden, come sit with us in studio next time. It's great to have you with us. I'm Joe Matthew. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Alphabet and Microsoft, they are leading the stock market toward the finish of a positive week. This actually would be the first positive week in the last 4. Alphabet apparently swimming in cash as well. Their earnings swept past analyst expectations for profit. Their parent company, Google, saying it's going to start paying a dividend to investors, authorizing a stock buyback of up to $70 billion. And then you have Microsoft climbing about 2.4% right now after reporting stronger profit and revenue than analysts had expected. It cited strong growth in its cloud computing business as it pushes artificial intelligence technology. Well, that's overshadowing the economic report today, showing inflation remaining stubbornly high. And then you have the oil majors. Let's just do ExxonMobil. Not all the earnings apparently are blockbusters. ExxonMobil shares down about 2.6%. They had a rare miss. Right now, the S&P 500, 54 points higher. That's up just over 1%. We're at 5103 on the index. The Dow Jones Industrial Average up 169 points. And the Nasdaq Composite Index, 319 points higher. That is up just over 2% in today's trading. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues with Joe Matthew.
All right, John Tucker, good to see you, my friend. Happy Friday. Welcome to the Friday edition of Balance of Power on the radio, on the satellite, and YouTube, where you can find us now. Go to YouTube, search Bloomberg Global News. Our live feed is always rolling there. You can even back it up if you miss something, you want to see an interview. It's kind of cool. We have a lot to talk about with Michelle Jamrisco as the Secretary of State continues his work, or I guess technically wraps it, in China. He actually got to sit down with Xi. There were some questions about that. President Xi, the Secretary of State, following his meeting the day earlier with the foreign minister. And as usual, it's cross currents. We're talking about re-engaging this new stability that we feel in our relationship, even as we threaten new sanctions. We did hear from the Secretary of State earlier, following his meeting with the foreign minister. Let's give you a sense of what he was saying, and we'll bring in Michelle. Here's Antony Blinken.
There's no substitute in our judgment for face-to-face diplomacy in order to try to move forward, but also to make sure that we're as clear as possible about the areas where we have differences, at the very least, to avoid misunderstandings, to avoid miscalculations. That really is a shared responsibility that we have, not only for our own people, but for people around the world, given the impact that the relationship between our countries has around the world.
No, we're being clear, all right. As he then advanced to the conversation with President Xi, you see this story on the terminal? Xi warns Blinken against vicious competition between the U.S. and China. Vicious competition. Michelle Jamrisco covers not only the White House, but is an expert on the Global South, and great to have you always at the table.
Great to be here.
Is that new language? Was this trip successful or not?
I think the avoid miscalculations phrase is a key one here. I mean, this is something we hear all the time. It's about managing the relationship. It's about stability. It's about avoiding miscalculations. What they're both trying to say on both sides, U.S. and China, is they want to keep talking. They see the value in restoring, for instance, military-to-military ties since November, since the two leaders agreed on that. And they just want to kind of restate their positions. But clearly, those positions are at odds with each other and continue to be at odds with each other. And I think the key out of this trip is that China is now saying that some of the risks of miscalculation are rising, and those risks include around geopolitical conflict and other disagreements they have on a number of issues.
Well, this is a problem because, I mean, wasn't Wang Yi talking about a relationship that was coming back to stability, yet we're also seeing risk rising?
Yeah.
Which I guess is consistent with our mixed messaging on this. But I want to ask you about a couple of things. One is the crackdown on so-called unfair trade. Is that essentially reinforcing the message that Janet Yellen brought last month?
Well, that's right. And they're trying to do, they being the U.S. and the White House and all the cabinet officials that have kind of paid their visits to Beijing over the past year, they're trying to do two things at once. I mean, and at least, Secretary Blinken had to do this as well. They're arguing about overcapacity out of China. This big economic argument that China is unfairly to the rest of the world exporting its problems, trying to export its way. Yes, exactly. Export its way out of a little bit of an economic slump. But at the same time, they're doing things like trying to crack down on what they're saying China is supplying to Russia, and in that they have to issue export restrictions and tariffs and other penalties. And so all of this is kind of also weighing on China at a time when they're not economically very strong, and it's causing them to say things like Wang Yi did, which is, why are you kind of raining down on us, trying to you say you're not about de-risking or delinking, but you're really trying to, suppress our economic growth.
Right. So it's interesting. You're looking at the two things I wanted to ask you about as one, because this message of sanctions specific to Russia is really fascinating when it comes to the war in Ukraine. As we heard from a senior foreign policy official, Ukraine is not an issue between China and the U.S. The U.S. should not turn it into one. Can we hear from Antony Blinken again? He spoke, the Secretary of State, about sanctions on his trip to China. Let's listen.
If we don't see a change, we have, in the case of the United States, we've already imposed sanctions on more than 100 Chinese entities, export controls, etc. And we're fully prepared to act, take additional measures, and I made that very clear in my meetings today.
Okay, so that sounds threatening now. Their heads must be spinning in these meetings, right? We start by shaking hands.
Right.
We talk about our strengthening relationship, our need to sort of coexist, and then there's a threat at the end of dinner.
Yeah.
So what's he coming home with?
Well, this is what's so fascinating about the Ukraine-Russia issue, too, is because usually on some of these geopolitical conflicts, you'll hear from the U.S., we want China to be a constructive player. They have leverage with players like Iran, like actors like Russia. But they don't push too hard in general in broader conversations. But now it's getting to the point where, and you saw Secretary Blinken, this was one of his main goals this week in his trip, is to point out where China is actually enabling Russia and where there is concern. The U.S. has said that they don't think China is providing lethal aid to Russia, but they do see parts and munitions and rocket propellant and other machinery that is helping Russia in their fight. So now the time has come for penalties from the U.S. side on China for those actions that they say are destabilizing.
Well, you just said a lot there. It's a fine line between those items and what we would consider lethal.
Well, that's right. Yeah.
Weaponry. Right. You can't have lethal weapons without those components, right?
That's right. And you have to get into very technical discussions about what we know they're providing and what that end game is, what that looks like. But, again, the Secretary had to make the case that it's bad enough right now to warrant further sanctions. And that was a message that Secretary Yellen carried as well, with signaling, actions on Chinese banks.
Donald Trump is threatening 60% tariffs or whatever his most recent interview was. That may have been an ad lib. That might not be a serious proposal. But it does seem like China is having difficulty telling these two administrations apart.
Yes, I think there is certainly a penchant for aggression to counter China from both sides. And that's part of what we see in Washington. It's hard to find a China dove these days in this city. But I think the idea is there's different styles, of course, between Trump and Biden. You see Trump, the deal maker, the bilateral decision maker, versus Biden trying to kind of trumpet, we're getting international coalitions, we're getting creative groupings together, as we saw when Japan and Philippines delegations visited.
Yet the tariffs are still right where they were.
Yeah, right? and this also speaks to a broader conversation. I mean, if you ask who China would prefer, it's hard to say, but also they're kind of happy to portray the U.S. as kind of a destabilizing force. You look at Gaza, what they're saying to third-party countries about the U.S.'s Gaza policy, and then in relation to that, saying China is the peaceful power, is the responsible power, and we're the ones that can kind of help lead the world into a more peaceful international order.
In our last couple of minutes, tell me about TikTok. We make such a big deal out of this in Washington, fraught with controversy. Now that this is actually happening, China's got to sign off on this divestiture, and it's not going to, based on everything it has said. How much is this angering or inflaming tensions between our two countries?
Well, I think very much. I mean, you saw a couple weeks ago on the Biden-Xi phone call, we did learn later that it was brought up, and it was perhaps brought up initially by Xi, who was concerned about, obviously, the Chinese officials have said that they might challenge it in courts. I don't know how you do that, but there's a lot of questions about how they might retaliate or what they might do.
It's heading for a ban, though, right? Anytime I say that to a lawmaker, they say, no, it's not a ban, and everyone's really sensitive about this right now. But if China doesn't approve of this, then we just watch this slow motion thing for a year and they get banned, right? And then American teenagers will VPN their way around the thing and go on it anyway.
Right. I think lawmakers had a good case to make that the bill itself wasn't a ban, for sure. And that's what we were careful to report, that this is, this immediately is a divestiture bill.
Absolutely.
But yes, to your point, there's not a clear buyer who.
You think China's going to sign off on Stephen Mnuchin buying this thing?
Well, and this is an
interesting.
It's an interesting dilemma as well on the U.S. side. I mean, even if it were something that would satisfy the sellers, it could run into antitrust issues. Who's big enough an investor to buy something that wouldn't then bring up, are you too powerful in the market?
There you go.
So we'll have to see where that goes on this side as well.
Yet you cover Joe Biden. His campaign's still on TikTok.
That's right, and we continue to ask them, why is that the case? What they say is they're going to go where the voters are. They need to speak to where the voters are. So it's a little bit of a different opinion and view than you would hear from the White House staff itself. But
yeah, pretty remarkable. Great to have you with us. Her understanding of the nuances around this issue always leads to a wonderful conversation. Michelle Jamrisko, many thanks, as always. Bloomberg White House correspondent. I'm Joe Matthew in Washington. We've got a lot more to cover, and we haven't heard from the panel yet. Rick Davis and Jeannie Shanzano are on the way in on a Friday in the Capitol. Let's bring you up to date first on world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. There's been no end to campus protests over the war in Gaza. The head of an organization that advocates for individual rights and freedom of expression, Greg Lukianoff, says growing animosity on some campuses between protesters and Jewish students might have been avoided if the colleges had taken action.
Campuses should be citadels to self-reflection, asking, do I really understand this? Would I benefit from talking to someone that I disagree with? Universities, particularly elite universities, have gotten really bad at doing this.
Greg Lukianoff with the Foundation for Individual Rights and Expression. House Speaker Mike Johnson had called on President Biden to bring in the National Guard, but Biden says that's a decision for state governors. President Xi Jinping warned America's top diplomat that the U.S. should not target nor oppose China. Secretary of State Antony Blinken met with China's leader as the two countries wrapped 2 days of talks over disputes on trade and Beijing's support for Russia's war machine.
As we've told China for some time, ensuring transatlantic security is a core U.S. interest. In our discussions today, I made clear that if China does not address this problem, we will.
While the substance of talks was confrontational, both sides refrained from some of the sharpest rhetoric. And former National Enquirer publisher David Pecker has returned to the witness stand for his fourth day of testimony in the criminal hush money trial against Donald Trump. Trump's lawyers are questioning Pecker on cross-examination. He had testified that he had hatched a plan with Trump and former Trump attorney and fixer Michael Cohen in August of 2015 to help his campaign. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
And I'm John Tucker of the Bloomberg News with this Bloomberg Business Flash for you. Blowout earnings from the tech heavyweights, sending stocks higher. As we close out the week, it looks like it's going to be the first positive week in about 4. Global parent Alphabet among the leaders in the S&P 500, up 10%. Microsoft right now, those shares, they are up close to 2.5%. That's the focus for investors. You also had the economic numbers, the Fed's preferred gauge of underlying U.S. inflation, rising at a pretty brisk pace for the month of March. J.P. Morgan chief economist Bruce Kasman says, don't expect Fed interest rate cuts anytime soon.
So there's both a story here about the economy holding up very well with high interest rates, as well as inflation pressures being persistent. And while I don't think it's right to talk about this from the point of view of Fed tightening, I think the case for Fed easing here is pretty small anytime soon. We'll see where we are 6 months from now.
Fed policy makers do meet next week. Nobody really thinks they're going to do anything at that meeting. You have some decliners. ExxonMobil, Chevron declining after disappointing first quarter performances. Overall, the S&P 500 right now 60 points higher. That's a rise of 1.2%. We're at 5,108 on the index. The Dow Jones Industrial Average 206 points higher. That's up about 0.5%. And the Nasdaq Composite Index up 337 points. That's a rise of 2.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues with Joe Matthew.
John Tucker, thank you, as always, live from New York. What are you up to on June 30th, by the way?
June 30th. I'll be just getting over
Wondering
my
if you have anything
wild
going on.
birthday celebration.
Oh, good. Excellent. Well, I'll tell you what, the hangover might block the reality of congestion pricing kicking in that day, I guess.
The MTA
I just think of you when
here
those headlines
in New York
run.
City, they tell us that congestion pricing is going to start at the end of June. I got to
And surely
question
they would
that.
coincide it with John Tucker's birthday.
Yeah. Well, I got to question that because it's still in court, remember? So maybe some of this is just the inherent institutional arrogance of a public authority. If I can comment.
Well, I know Governor Phil Murphy and others have filed lawsuits. There was talk of a class action lawsuit in John Tucker's name. Is that true?
No, that's not entirely true. I mean, yes, I will be impacted, but I have to look at the bigger picture. Yes, they need money for subways and subway improvements, and this is one of the few ways they can do it because ridership is still down from pre-pandemic levels here in New York City, and the subway is the lifeblood of a city, a metropolis like this. So take that for what it's worth.
If you have a parking spot north of 60th Street.
I'm still looking.
Let
If
us know
you
for
know anybody, give me a call.
Yeah, I'm putting out the word. It's just international. John, thank you. We're always keeping John Tucker's plight in mind when it comes to this story. That broke earlier this hour. We're not joking around. June 30 is what the MTA says. Meantime, in our nation's capital, I'm Joe Matthew, and it's great to see you on this Friday. We're going to assemble the panel here, of course, with our eyes constantly on New York, where Donald Trump is back in court today. This is cross-examination. Pretty fascinating. David Pecker, the former publisher of National Enquirer, on the stand. Prosecutor Steinglass, quote, "Does this contract say anything about trying to help Mr. Trump's campaign?" Unquote. "No, it does not," Pecker said. "Does the contract even mention the word campaign?" asked Steinglass. "No," Pecker said, as they try to undo the testimony that we heard the past few days. Some real revelations here, as you can read on the terminal. Pecker telling a jury today he promoted Donald Trump and shielded him from unflattering stories long before the 2016 presidential campaign. He told stories about meeting with the president and other officials in the White House following his election as president, and continued conversations about hiding stories, this catch and kill thing with Karen McDougal and others. So we bring in the panel for their take on this Friday, the end of this first week of activity in the courtroom. Jeannie Shanzano and Rick Davis are with us, Bloomberg Politics contributors. As always, I try not to turn you guys into legal analysts. It's more the politics at hand here. And Jeannie, I'll start with you. The impression of the story that David Pecker is telling. I know that they're trying to try to unwind, as I said, some of this right now in cross-examination. But in any other world, any single one of these stories would be the end of your political campaign or your political career, wouldn't it?
It certainly would have in the past. And, we heard on a cross-examination yesterday and obviously continuing today, other names of political people come up, like Arnold Schwarzenegger, and then, of course, Hollywood folks like Mark Wahlberg, of all people, and Rahm Emanuel. So, the cross-examination trying to depict that this was just par for the course. But to your point, that, the fact is, this would have killed any other candidate at some point. But I think we jumped that shark in about 2015 with the Hollywood Access Hollywood tape. And I don't think there's any going back to that. So we're in a new era, and you're hearing all kinds of examples of this. Donald Trump continues to fundraise, and he was pretty upbeat after the cross-examination started, at least yesterday.
Really remarkable stuff. Rick Davis. Donald Trump also, we understand, refused to actually pay back David Pecker the $150,000 for catching and killing the McDougal story. But to suggest that it was more than these meetings in Trump Tower, they were actually meeting in the White House in 2017. Donald Trump threw Pecker and some of his business associates at dinner at the White House, where they did discuss the McDougal case. He was in a room at one point with then FBI Director James Comey, Reince Priebus, Mike Pompeo, the Secretary of State, and the Enquirer guy, the tabloid CEO, of whom Donald Trump said he probably knows more than anybody else in this room. Rick, what do these stories do for you?
Yeah, I mean, Pecker knows which aliens actually got to New York City first. So, I mean, like, that guy's the keeper of all the secrets. The Inquirer knows. Look, I mean, I think part of what we have to do is put ourselves back in that time. I mean, Jeannie mentioned the Access Hollywood tape. I mean, it was an extraordinary development in October of 2016. I mean, just a few weeks before people went to the polls and vote, people were voting in states all across the country, early voting, while that tape was being aired. And this deal was getting struck to keep these kinds of issues from bubbling up during the most tenuous portion of the election for Donald Trump. So, you know, in a vacuum, sure, you know, catch and kill for a Playboy model that you had a year-long affair with in a vacuum, yeah, sure, that it sounds bad, it's embarrassing, but you really don't understand how it would have affected the election, which was incredibly tight back in October of 16. So part of the job I think that the prosecutors are trying to do is get the jurors back with a headset into that time, and of course they're limited because they can't even talk about the Access Hollywood tape. And then you quick turn forward to right now, and this is kind of no man's land in elections. Not much happens in May, June, July. Then you hit the conventions at the end of July and August. Things ramp up, and then a sprint for 60 days to the election. So if you have bad news, now's the time to air it out. You know, when people are planning their summer vacations or graduating from college, and they are distracted. And so, you know, it's funny that the issue they're talking about was at the height of the elections in 16, and they're talking about it at a time when people couldn't probably care less today.
Boy, you know, the idea of short memory is a very real one in American politics, Jeannie. Here we are talking about this the 26th of April. Everybody's going to go away for summer. Like Rick said, you can stop paying attention to all this stuff. You come back maybe after Labor Day, get the kids in school. What's this election again? Is it to Donald Trump's benefit that this trial's happening now?
You know, it's hard for me to say it's to his benefit, but I think timing wise, it's best to get it done now. The last thing you want is in people's minds, as you and Rick were just talking about, around Labor Day, September, October, when this is on the minds of people. Who knows? Now, maybe the January 6th trial will go forward at that point. He's got a lot of other potential trials. But I do think that it's better off this way than not. And I would say one downside for Donald Trump is this, of course, is taking place in New York City. All the media are there, easy for them to cover it. So he loses on that end because the coverage has been pretty much wall-to-wall 24/7.
That is for sure. And I guess coverage of the trial is going to continue here. We'll have more with our panel in our second hour. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Love spending a Friday with Rick and Jeannie, and we will have more to follow there as we wait for a ruling on the Trump gag order. He's back in court watching David Pecker in cross-examination. But when the gag order headline drops, and we don't know when that'll happen, that will be the next kind of major turn here. The prosecution arguing yesterday that there's more where that came from, that Donald Trump violated a gag order 4 more times, which brings the number of alleged violations, if I'm up to date, at least to 15. So they're asking for them to hold Donald Trump in contempt. He has not ruled yet on the matter, and I'm wondering if now we have to have a whole other hearing on these new violations, alleged violations. You know who we need to ask about it. I'm glad to tell you June's back. June Grasso, of course, the voice and the force behind Bloomberg Law. Nightly, 6 p.m., New York time. Donald Trump gets out of court typically just in time to listen to June. And that gives him a sense of what the strategy is going to be tomorrow. In this case, I guess Monday. June, it's great to see you. Are we going to get something on this gag order soon or what?
I don't think so. The judge has scheduled another hearing on it, so I don't think so. What's sort of amazing is that we're talking about the gag order. There have been, several arguments in the court about the gag order, and yet he is still disobeying the gag order. Yesterday, he was at a construction site and he said, "Here's a message to David Pecker, be nice." It's sort of hard. He's being blatant about it, and that makes me question, what is he thinking, and will anything stop him from disobeying the gag order? Because I don't think money's going to do it. So the judge is in a tough spot here, because the last thing he would ever do is jail Donald Trump. So it's sort of stunning that he is still disobeying. As I mentioned the other day, he came out of the courthouse and just went in on Michael Cohen. I don't know. I've never seen anything like this, really.
You mentioned David Pecker. Tell me about this cross-examination today, how important this conversation is, because he dropped a few bombs yesterday. We were just talking to Rick and Jeannie about stories about White House meetings, well past Donald Trump becoming president, and going well before that, helping with catch and kill stories. To what extent is he helping Alvin Bragg this week?
Well, I think he's definitely helping Alvin Bragg. I mean, the prosecution puts a witness forward first who can really help them sort of set the trial up. And one of the reasons he's there also is to help prop up Michael Cohen, who we know is going to be attacked, the most attacked witness here. So he's there to set that up, and he has established that Trump told him Michael Cohen's the point man here. And he also has established that no matter what else is said, this was all about Donald Trump's 2016 presidential campaign. So on cross, they did make some points. And yes, you could say there are a lot of catch and kill stories out there, but it's not the catch and kill story that's illegal here. So, whatever they did with other celebrities, which I'm sure the jury found interesting, but whatever they did, that doesn't matter here, because this is a different story. This is about campaign finance. This is about business records. So I think that and also they also went in on his deal. I think juries nowadays are sort of used to having witnesses who make deals. I mean, look what happened in the Sam Bankman-Fried trial. I mean, all the main witnesses against him had made some sweetheart deals. So I don't think that affects a jury as much. So, we'll see. The prosecution is now trying to rehabilitate him as a witness, but I think he held up pretty well.
Who's the last witness? Who's the closer? Is it Stormy Daniels? Is this going to be some kind of dramatic moment when she's ushered into the courtroom to tell her story at last?
That is a great question. So I'm not sure who the last witness is, but I think that Michael Cohen and Stormy Daniels will be coming up soon. I think that the prosecution wants to really, hit the jury with these witnesses, and maybe there'll be cleanup witnesses afterwards. I mean, we don't know. Sure. We don't know, because the prosecution, this is really incredible in the world of jury trials. Usually, it's a common courtesy. You give the other side notice of who's coming up so they can prepare, and then they give you notice. Here, the prosecution is saying, we're not giving you notice because we're afraid that Trump is going to talk about it, and the judge said, yeah that's fair. So I think it's late the night before that the prosecution tells the defense who's coming up. So I don't know. I think Michael Cohen might be coming up soon, though.
Fascinating. Next time you're with us, I want to ask you about the security surrounding these witnesses. I can't imagine what all of them will go through in the process here, with the world watching, and of course, MAGA supporters trying to get to all of them and find their information. June, it's great to see you. We'll be listening as ever, 6 p.m. New York time. June Grasso on Bloomberg Law. If you're not subscribing to the podcast, just a hint for you too, so you can drive home and find out what happened in this case every day. We always keep you posted with June here on Balance of Power. A lot more coming up in our second hour. We're going to get back to the economic data of the day. 3 makes a trend. Kaylee Lyons is coming in, and so is Anna Wong from Bloomberg Economics. Next on Balance of Power.
world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The markets are taking the data in stride. How about the Biden campaign? Welcome to the fastest show in politics. As PCE data come in hot, a third straight month impacting politically here in Washington. I'm Joe Matthew alongside Kaylee Lyons. We've got a lot to talk about, Kaylee, on this Friday.
Indeed.
Welcome to the threshold of the weekend. Donald Trump in court today, which is probably getting more attention politically than the impact of these data. But at Bloomberg, of course, we're always focused on inflation and what it means in this case for Joe Biden.
Yeah, and it's worth noting that the inflation data we got today, not only in the form of PCE, but also consumer inflation expectations. We got UMISH today, Joe.
Yeah, right.
Sentiment going down, inflation expectations going up, both for really just for the next year. And that is also directionally not what you want to see if you're in the Federal Reserve on the one hand and if you're in the White House on the other.
That's right. I guess the markets are caught in the headlights of Google and Microsoft, though, because it feels a lot different than it did yesterday.
Indeed. And certainly John Tucker has been paying attention to the trading action over the last 48 hours. So I guess we maybe have tech earnings to thank John Tucker?
Yes, we do, even though they reported at the close of regular trading yesterday. Still boosting markets today. Stocks higher, as you say, Kaylee and Joe, extending this week's advance. Microsoft and Alphabet showing that, you know what, spending on artificial intelligence and cloud computing is paying off at this point. They both delivered blowout earnings. Right now, we have 8 of the 11 major industry groups in the S&P 500. They are higher. You have communication services and information technology. They are leading the way. And Kaylee, that's helping offset the worries about the economic backdrop you're talking about, where inflation seems to be persistent. The Federal Reserve's favored price gauge coming in roughly in line with estimates, maybe a little higher. And we also had that separate data you talked about, consumer sentiment falling for the month of April. As for the Federal Reserve and those much vaunted rate cuts we're expecting, March, June, now that's been pushed back to November or even December, and just one. Right now, the S&P 500, 62 points higher. That's up 1.25%. We're at 5,111. The Dow Jones Industrial Average, 225 points higher. That's up 0.6%. And the NASDAQ Composite Index, 353 points higher. This is the NASDAQ, the tech-heavy NASDAQ, we like to say, up right now 2.25%. The two-year yield, even with that inflation data, under 5, just under 5 at 4.99%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Balance of Power continues with Joe and Kaylee.
All right, John Tucker up in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew, live in Washington, D.C., where we know President Biden always tries to put a positive spin on economic data when we get it. For a while, Joe, it did seem that the data was trending more in the favor of an incumbent president, with growth in the labor market hanging in there. Inflation was cooling. It feels that maybe that is happening to a lesser degree now. It wasn't too hot today, but it was still slightly hotter than expected, or at least one of the metrics.
And there's thoughts that revisions could be a greater problem, as we seem to be stuck here. If plateauing is the word to use, I'm not sure. I guess that's better than continuing to rise. But Anna Wong is with us from Bloomberg Economics for her take, as Anna is frequently the contrarian on some of these issues and not always in line with the conventional wisdom on Wall Street. Good to see you, Anna. Does this confirm the fears that so many people had yesterday? Because it's really being kind of snuffed out by strong earnings and a different attitude today in the market.
Yeah, it's actually better than what people feared yesterday. I was here in this program yesterday, and I said that the Wall Street was reacting to yesterday's GDP implied inflation, thinking that today they're going to see core PCE going at 0.48. Instead, we got 0.32, which was in line with what we were expecting yesterday. And this is why today we see that 2-year yields and the 10-year yields actually came down, because it's not as bad as it's uncomfortably hot.
Yeah.
Well, and I guess that kind of brings us to this question as to whether or not being as bad as it could have been makes it really good news. If you're the Federal Reserve thinking about how tight policy is going to need to stay for how much longer, if you're a market wondering when the Fed is going to be making those decisions that they can ease policy. Ultimately, this doesn't really change what we thought yesterday in terms of what the Fed will do, right?
Yeah, exactly, Kelly. So the big picture is that inflation is stickier than the Fed wants. And next week, we're going to have Powell probably coming out to make a big hawkish pivot. And the reason why we expect that big hawkish pivot from Powell next week is that, the other day, one of the most dovish member of the FOMC, Austin Goolsbee, said that the Fed will have to recalibrate the strategy. So if even the most hawkish member said they need to recalibrate, it means that the whole committee is likely going to signal something big next week.
Wow, fascinating. So the news conference, if not the statement itself, the language might change in the statement. What would be Jay Powell's posture here? Because he seems to have gotten to the point that where he wanted to convince the markets that we're not cutting anytime soon.
Yeah, I think Powell could even briefly hinted that maybe they won't cut rates, and in fact, a rate hike could be an option on the table. I think that would be enough to send the market going.
That'll go over well.
Yeah, right.
All right, Anna Wong, Chief U.S. Economist at Bloomberg Economics. Been a busy couple days for you, and it's certainly going to be busy next week. Thank you so much, as always. And of course, Joe, as we've discussed on this program in the last several weeks, Joe Biden has not actually proven that reluctant to talk about Fed policy, recently standing by his idea that the Fed will cut at least once this year, maybe just a month delayed in his
Sure, no one will
words.
be playing back that tape.
Well, yeah, I guess we'll see about that. And we know that Donald Trump and his administration was very vocal about what the Fed should do.
He's tweeting at him every day. You see this Wall Street Journal story
yes,
about
indeed.
the Trump administration, if there's another reshaping the Fed. They're talking about allies of Donald Trump, though. They're having these meetings about how they could sort of dismantle things and have the president himself or herself play a role in setting interest rates. But I wonder if Donald Trump himself is involved in those conversations. The story didn't seem to indicate that knowledge.
So we'll look for more clarity, but we might not be getting it today because Donald Trump is a bit tied up at the moment. He is in court in New York in the hush money case where David Pecker is being cross-examined on the stand. It seems that his defense team is trying to make the case that David Pecker was not just trying to help Trump politically, but potentially help the Playboy model in question, Karen McDougal, reset her career. So that is where we begin now with Dave Ehrenberg, who's the state attorney down in Palm Beach. We always love to have Dave on the show. Welcome back to Balance of Power on TV and radio, Dave. Just walk us through how you are reading the days of testimony that we have seen thus far from Mr. Pecker and how you think the case is going so far for the defense on the one hand, for prosecutors on the other.
Well, it's great to be back with you. I think it's going well for prosecutors because Pecker is able to corroborate Michael Cohen's story that he will tell. And Michael Cohen has been a very important but flawed witness because he had a prior conviction for perjury, among other things, even though he was lying on behalf of Donald Trump. But it's important to get corroboration. And Pecker was part of Trump's inner circle during his campaign. And the key for Pecker is also to set the stage for what was going on. This wasn't a one-off. This wasn't a one-time deal with Stormy Daniels. This was a coordinated effort to catch and kill stories that would be damaging to Donald Trump for the sake of his election. It was done right before the election. There was a non-disclosure agreement with that doorman that expired right after the election. There was the payment to Stormy Daniels 2 weeks before the election. So this also undercuts Donald Trump's certain defense that this wasn't for the election. This was just to help Trump with his wife, Melania, to keep this stuff secret. So it was to protect his marriage. No, Pecker exposes the falsity of that because it was, according to his testimony, all about the election.
So, Dave, it's great to have you. Good to see you. When are we getting a ruling on this gag order? Do we have to wait for another hearing? We thought we had a hearing, but then there are, I guess, 5 more violations since then. It almost seems like a strategy. As long as Donald Trump continues to violate the gag order, they'll never be able to enforce it.
Yeah, Donald Trump supporters say that he's being treated differently than everyone else, and I agree, but not for the reasons they say. I think he's being treated better than others because, Joe, if you and I were out there bashing the judge and violating his orders, we would be locked up yesterday. I mean, we would be wearing an orange jumpsuit and steel bracelets. But Donald Trump is able to do these things because judges don't want to appear political and they want to show they're even-handed. So they bend over backwards to give him the deference, the grace to continue doing this. And at most, he'll get hit with a fine. Do not expect that he will be incarcerated pre-trial because of his words, no matter what he says.
Okay. Well, what about post-trial, Dave? I mean, ultimately, when we're considering the jury going to decide whether or not to convict him of these charges, these are felony charges, 34 of them. Maximum penalty of 4 years in prison for a Class E felony. Do you think realistically that will ever happen, that we would see Donald Trump behind bars?
Unlikely. I think he would get either probation, which he's eligible for. There is no mandatory minimum with these charges, or perhaps he gets some version of house arrest. I cannot envision the Secret Service taking up shop in the cell next to Donald Trump in New York, especially because this case, although I do think the prosecution has a good case, on appeal, it could get a little shaky because there's some uncharted territory here, legally speaking, as to whether you can use the second statute, which appears to be a state election conspiracy statute, to elevate a state misdemeanor to a state felony, when that other statute involves campaign finance stuff. And can the state regulate campaign finance when that's a federal election? Wouldn't they be preempted by federal law? These are the kind of arguments that Trump's lawyers will be certain to make on appeal. And I think Trump has a better chance on appeal than he has in this current trial, where I think it's probable he's going to be found guilty.
Fascinating. Dave, I was talking to June Grosso a little bit earlier about the security that's afforded the witnesses, high-profile witnesses like Michael Cohen and Stormy Daniels. This is going to take on a whole new look and feel when we see these two individuals specifically, and I'd say even most especially Stormy Daniels taking the stand. That's going to be hear a pin drop. The kind of stories that she's going to be telling will be explosive. It's one thing to be in the courthouse. What kind of security are they afforded while they're in New York for this whole experience?
Well, the security would be pretty much their own that they would have to come up with. I don't see that.
So none.
The prosecutors will take care of them while they're testifying and around the time they're going to the courthouse back and forth. But after it's over, after they testify or before, it's up to them. And that's the scary thing. That's why you have a gag order, because you don't want Trump to rile up his very aggressive masses. He's got some real hardcore supporters who will show up at Barack Obama's Georgetown condo with a van full of guns and ammunition after Trump doxes the former president. So we've seen this before. We saw it on January 6th. So yeah, you're right to be concerned about their safety. And that's why the judge should enforce these gag orders more strictly, because you don't want him attempting to tamper with witnesses.
Well, on the subject of witnesses, Dave, it's also worth pointing out that Donald Trump has indicated he may testify in his own defense at some point, not just other witnesses that will take the stand. If you were on the prosecution team or on the defense team, how would you feel about Donald Trump testimony as these trial weeks go on?
There is zero chance that Donald Trump will be taking the stand. I know he's saying he's going to, but that's for public consumption. That's for the benefit of his team, of his supporters, so that they see, yes, he's got nothing to hide, and then he'll find a reason why he's not taking the stand. If he takes the stand, he's subject to a withering cross-examination. He'll have to deal with the embarrassing details of the Stormy Daniels relationship, and he'll have all the stuff that's going to come in about, for example, the civil fraud trial that he was just found guilty of up there in New York. I mean, things that will embarrass him, he will not want to respond to. And if he does respond and lies, he could be charged for that. So he'd be walking into a perjury trap. His lawyers will not let him take the stand. Donald Trump knows better. Right now, it's all bluster. Don't believe the hype.
Who's the slam dunk in our remaining moment here, Dave? Who's the slam dunk witness? They've been trying very hard to discredit Michael Cohen. Is it Stormy Daniels herself?
No, I'm going to go off the board here. It's not Stormy Daniels, not Karen McDougal, not Michael Cohen. They're all important witnesses, but they have somewhat of an axe to grind. You know who doesn't have an axe to grind, Joe? Hope Hicks. Hope Hicks was in the room where it happened. She was on Air Force One steaming his clothes while Trump was still wearing them. I mean, she's privy to a lot of private conversations, and she's a Trump loyalist, and she cooperated with the grand jury. She's going to be brought in for corroboration. That's going to be must-see TV, even though there are no cameras in the courtroom. Wow. But at least maybe people can watch us talk about it afterwards, because when Trump sees one of his most loyal aides up there to corroborate Michael Cohen's testimony, I think that's going to be the big thing. So watch for that.
Incredible. It's always great to have Dave Ehrenberg. Good to see you, Dave. Let us know when you're back in town. He's Palm Beach County State Attorney. reinforcing the drama, Kaylee, in this case that typically does not need a lot of reinforcement. If there's one thing we have in ample supply, it's the drama in New York.
Certainly. And some of that is brought in and out of the courtroom in front of the cameras when Donald Trump speaks. We did hear from him, by the way, earlier today, because it's not just a trial day for Donald Trump. It's also his wife's birthday. This is what he said about that.
I want to start by wishing my wife, Melania, a very happy birthday. It'd be nice to be with her, but I'm at a courthouse for a rig trial. It's a rig trial. Terrible. But we're doing very well in this rig trial. Everybody knows it. Yesterday was a big day, but I do have to begin by wishing Melania happy birthday.
Happy birthday to the former First Lady, who we don't see very often with Donald Trump, but nice of him to mention Melania as we assemble our panel. Just for a couple of minutes here, want to have Rick Davis and Jeannie Shanzano each take a swing at what we heard, and we'll have a deeper dive coming up here on Balance of Power, our signature panel with us. Rick, what do you think after hearing from Dave Ehrenberg and what we're about to experience the next couple of weeks for someone who's trying to be elected again to the White House?
Yeah, I can't even fathom the campaign disarray around having your candidates sitting in a courthouse, 4 days a week with Wednesdays off, and trying to beat out some kind of message each day. It's just intolerable. And there's no good news coming out of this, right? You'd have to dig for the pony to find a positive news story out of these trials happening right now for him.
Well, Jeannie, Rick mentions he's stuck in court 4 days a week. He does have Wednesdays off. Reportedly, he spent this Wednesday this week, his day off from court, golfing at his club in Bedminster. So what do we do with that information?
Yeah, we thought maybe they'd sneak in a campaign event. They did not. It's fascinating to me to hear him wish, happy birthday to his wife, the former First Lady, happy birthday. But then he slips right in there to calling the trial rigged, rigged, rigged. He simply cannot control himself or help himself. And he's walking dangerously close to more and more violations of this gag order, which we still don't have a ruling on by the judge. And all of this makes it not just a headache for the campaign, which is big, but for his attorneys as well. I mean, we don't even know the next witnesses because he's constantly attacking them. The prosecution won't reveal the list. So it's a nightmare for everyone trying to work with him. And, there's not much more that they can do to control him, though.
Jeannie Shanzano and Rick Davis. We're going to have a lot more coming up with our panel. They've got to do another hearing on the gag order, right? There's 5 more
next Thursday
alleged violations. I'm Joe Matthew alongside Kaylee Lyons. We'll have more coming up on Balance of Power, only on Bloomberg.
And I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash, stocks getting a tech-driven lift today. Gainers, communication services and information technology. And that's home to Google parent Alphabet. Shares up 10%. And Microsoft, shares up 2.5% after their earnings. That's advancing the artificial intelligence narrative. How about an overall earnings scorecard for you? 228 companies in the S&P 500. They have opened their books to investors so far this earnings season. Of those, 80% delivered positive earnings surprises. And then you have the inflation picture, the Fed's preferred gauge of underlying inflation, climbing 0.3% in March and 2.8% from a year earlier. And Fed officials widely expected to hold pat, holding rates at the more than two-decade high when they mate next week. Not going to do much of anything. At least that's the expectation. Balance of Power continues right now with Joe Matthew and Kaylee Lyons.
That's John Tucker realizing today that congestion pricing, Kaylee, is going to take effect. I think it's June 30. That's the reality. 60th Street.
Yep.
Would you have had to find new parking if you were still in Manhattan?
Oh, yeah.
That's a huge issue.
It is.
Especially when you're parking like 3 blocks away, which is the case for so many of our colleagues in New York.
Yeah. Jeannie Shanzano's probably going to be impacted by this as well.
A lot of New York news this week. We're here in Washington talking about New York every day. Joe Biden there, Donald Trump, of course, there in court. And there are questions today after Joe Biden did an interview with Howard Stern about whether we're going to see any debates at all. This is not the first time that this has come up, because we know that Joe Biden has questioned this. He says, well, what if he is lying through the whole thing? How do we manage that? Is he a credible person to debate? And we also know that Republicans have a huge problem with the commission on debates and don't want any of the mainstream moderators who have been suggested.
Yeah, well, and Donald Trump did not partake in a single Republican primary debate. We just saw Ron DeSantis and Nikki Haley and Vivek Ramaswamy fighting it out amongst themselves as Trump remained the front runner. So I guess we'll see if things are different now that we're in the general. This is what President Biden had to say on the matter.
Can I tell you a fantasy I had? If I don't know if you're going to debate your opponent.
I am somewhere. I don't know when. I'm happy to debate him.
So that was President Biden. The voice you heard before, if you're listening on radio, was Howard Stern, who was conducting this interview. And I will conduct an interview of our own now with Rick Davis and Jeannie Shanzano. Our signature political panel are with us. So, Jeannie, is this a good idea for Biden? He doesn't exactly know where or when, it seems, but he's open to it.
Yeah, I mean, this was fascinating. Apparently, this was an unscheduled, or at least I shouldn't say unscheduled, unannounced stop in New York. He's in New York today. And, even the White House press pool didn't know he was going to Sirius to do this interview. He goes there and he makes news. So, I think it was a coup for the campaign in that regard. I think it's also telling it is on Howard Stern and obviously not, in a more mainstream media outlet. But it is, of course, important because it's the first time we've heard the president commit to debating Donald Trump. And, of course, we had Donald Trump not that long ago at a rally with an empty podium talking to it, waiting for Joe Biden to debate. So the, Trump campaign has said they want to debate. Joe Biden's ready to debate. So, here we go. But, I also think it's a good thing for the campaign on Biden's part that they've been able to break through sort of the news of the Trump trial in this way during this trip to New York. So a good day all around for the Biden team so far.
Well, Rick Davis, we've come full circle, I guess, on a couple of matters. Howard Stern is now hanging out with Joe Biden. I can remember when Donald Trump was one of his favorite guests. He could come out with a catalog of archival interviews. Some would suggest he helped to get him elected in the first place by making him the character that he became on that program. But it seems like Donald Trump, maybe Republicans have come full circle on the idea of debates. I thought they had an allergy to debates on network television with mainstream media moderators. But recent reporting has suggested otherwise. Are these two guys going to get on a stage or not?
Yeah, I've sat in that studio with Howard Stern talking to John McCain about presidential ambition, and nothing made me more worried than that hour-long time. And frankly, I seem to recall we did it as a stop-by, too. We didn't tell our media pool and just went over there. So it's the place you go to have some fun. It was a pretty light interview, but I disagree with Jeannie. if I were sitting there and John McCain said, I commit to debating my opponent, I'd say, well, why would you do that? We haven't negotiated with them yet. I've negotiated a number of presidential debates. And if you're an incumbent, you start out with, why should I debate you? And you'll negotiate from there. Best I can tell, Donald Trump nor the White House has agreed to the commission terms. There's a National Commission on Presidential Debates that has already arranged times, places, and dates, and nobody has said yes to any of that. So we're a long way from having an agenda where those two candidates are going to be on the stage together. And I don't even know, I haven't seen anything in reporting that indicates that they've appointed debate negotiators and even begun that process, which is pretty formal. You come up with a memorandum of understanding and it governs the entire debate. So I wouldn't hold my breath right now if you were planning on going to a debate right away.
All right, reality check from Rick Davis. We always appreciate it. There's also just the question of what a debate would accomplish. I think we all remember how debates went down in the 2020 matchup between these two, Jeannie. It wasn't pretty, at the risk of editorializing. And they are now, because Biden ultimately won that election, two presidents we're talking about here. The American people know them. So what would a debate accomplish for either of them?
Yeah, that debate, you know, I remember it so well myself. It was stunning. And now we think Donald Trump had COVID during it, potentially. You know, I still am a believer in the debates because I do think it's important that the American public be given the chance to see the two candidates on the stage together speaking as much as possible. There is certainly room for improvement, God knows, but I do think it's important. And I disagree with Rick. I think this was Joe Biden, quintessential, calling Donald Trump's bluff. Yeah, I'll debate you. I think the worst thing he could have said to Howard Stern and his audience today was, oh, I'm going to sit back. No, you know, I'm not sure. No, bring it on. He can debate him. He's done it before, and he has won. I can guarantee Donald Trump, who hasn't debated this cycle yet, is going to come up with all kinds of excuses not to be there and make it hard. The Republican Party has already stepped away from the commission. So absolutely, Joe Biden did the right thing. He's on the right side of this. And let's see Donald Trump come forward and agree to it. He hasn't for any of his other opponents this cycle.
Jeannie, your wish maybe is Donald Trump's command, because he just posted on True Social. Crooked Joe Biden just announced he's willing to debate. Everyone knows he doesn't really mean it, but in case he does, I say anywhere, anytime, any place. It goes on after that, but I guess, Joe, there's
Are those all caps?
All caps.
Of course they are. We'll see that.
A's.
All right. Now we've confirmed that Donald Trump does listen to the program, which is interesting to me for starters. But they're both, Rick, going to act like I'm assuming they want to debate. You're one of the first people I've heard suggest that that will not happen. We didn't, to Kaylee's point, see Donald Trump in a debate once in the primary cycle. So will this be the debateless campaign?
Yeah, it very well could be. The reality is the media organizations and the Biden campaign, having learned, as Jeannie points out, from 2020, that there's no way to actually monitor the facts that come out of Donald Trump's mouth. I should say messages that come out of Donald Trump's mouth for factualness. You can't stop the debate after every answer and say, okay, here are the things that he said that aren't true.
Right.
You know, and when you look at town halls and things like that CNN has done and other outcomes, they're a disaster for those organizations because, you know, there's no way to govern Donald Trump's behavior. And so unless you have some understanding that it's going to be a fact-based endeavor, it's like taking Joe Biden and tying both his arms behind his back because he's likely to try and be accurate. Now, he may forget things and he may have other kinds of problems, but it won't be the kind of problems Donald Trump presents to the stage. And so if you're the Democrats, and I know having talked to some of their political folks, this is a real problem, right? One's fighting by Marcus of Queensberry's rules, and the other is fighting by the Bronx rules. You know, bring chains and a gun. And, you know, I'm sorry, Joe Biden, but that is not the way you operate. And so why say yes to that kind of a brawl?
Yeah, you don't bring a knife to a gunfight, Jeannie. This post on Truth Social goes further as he concludes with, "Let's do the debate at the courthouse tonight on national television. I'll wait." Is this kind of goading going to be what we do all summer?
I think it will be. And of course, number one, of course, he's listening to you too. And I'm so glad to hear it. And he should march right over to 731 Bloomberg and get on there. They should both debate. But you know what? I really have to say, Joe Biden enjoys being underestimated. He is up to this. He will absolutely be there and be present for a debate. Look at the last two states of the unions. He outperformed what anybody expected. He's one person who has debated Donald Trump and won an election. So I would not underestimate him in this context. So bring on the brawl. It's going to be a great summer.
We're getting like West Side Story.
Yeah, can we pull that for? I want to play that back. God, I don't know. What are we going to do, Kaylee?
I don't know. I feel like we did a disservice by not reading the full tweet because it's not just at the courthouse tonight. After he says
New York references.
Anywhere, anytime, any place, he goes on to say, I suggest Monday evening, Tuesday evening, or Wednesday evening at my rally in Michigan, going on to say, in alternative, he's in New York City today, although probably doesn't know it, and so am I, stuck in one of many
Although probably doesn't know it.
Yes. You can find that whole post on truesocial.com.
You're sending people there now. Rick Davis and Jeannie Shanzano, thank you. It must be Friday, and we need our closers with us. They'll be back later on, by the way. Our signature panel, 5 p.m., the late edition, Balance of Power, Bloomberg Radio and TV. Always something to learn from Rick and Jeannie. We're going to talk a little bit more coming up here, Kaylee, about our other top story today. That's economic data.
Absolutely. We're going to get Mark Zandi from Moody's on the program shortly. First, though, we got to get a check on world and national news with Amy Morris and our 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. The Pentagon is sending more Patriot missiles to Ukraine. It is a new $6 billion aid package. Defense Secretary Lloyd Austin.
Ladies and gentlemen, Ukraine's struggle for freedom matters to us all. If Ukraine fell under Putin's boot, Europe would fall under Putin's shadow.
Defense Secretary Lloyd Austin. President Xi Jinping warned America's top diplomat the U.S. should not target nor oppose China. Secretary of State Antony Blinken met with China's leader. The two countries wrapped 2 days of talks over disputes on trade and Beijing's support for Russia's war machine.
As we told China for some time, ensuring transatlantic security is a core U.S. interest. In our discussions today, I made clear that if China does not address this problem, we will.
They also announced a new working group on artificial intelligence to start in the coming weeks. Former President Donald Trump in court again today. His criminal hush money trial resumes. Jurors once again hearing testimony from former National Enquirer publisher David Pecker. And Buckingham Palace says King Charles will resume his public duties next week following treatment for cancer. He's been out of the public eye for about 3 months. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Alphabet and Microsoft leading the stock market toward the finish of a positive week. This would be the first week in the last 4 that ends up positive. Alphabet swimming in cash, the earnings sweeping past analysts' expectations for profit. The parent company of Google also saying it's going to start paying a dividend to investors, authorizing a buyback of some $70 billion of its stock. Microsoft, those shares, they are up right now 2.75% after reporting stronger profit and revenue than expected. It cited strong growth in its cloud computing business as it pushes artificial intelligence technology. And that, all of that overshadowing a report today showing inflation remains stubbornly high. You also have NVIDIA shares. They are higher today, up over 6%, rallying back from last week's sell-off. Overall, the S&P 500 61 points higher. That's up 1.2% or 5,110. The Dow Jones Industrial Average is up 223 points. That's up 0.6%. And the Nasdaq Composite Index 347 points higher. That is up 2.2%. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues with Joe Matthew and Kaylee Lyons.
All right, John Tucker up in New York. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here on Bloomberg Television and Radio. Happy Friday, at least for financial markets. As John was just outlining, Joe, it seems that Friday is a better day.
Yes.
The data's not as scary today, perhaps, for the market as it was yesterday.
Some better than expected earnings going a long way here, and it's hard to tell if we're caught in the glare of Google and Microsoft beating estimates, Kaylee, or if there's a little bit of a reversal in the negativity surrounding the PCE data yesterday, quarterly, monthly data out today, and it's telling a bit of a different story. We're certainly seeing a reaction here, a bit of a sigh of relief, realizing the headline's a problem, as we've discussed politically, for Joe Biden. But in terms of the economy itself, Mark Zandi at Moody's Analytics went out with a tweet yesterday that might tell us a lot about where we are today. Mark writes, the weaker than expected growth was largely the result of a bigger increase in the trade deficit driven by more imports. Perplexed by the sell-off in the stock and bond markets. He's with us now again, Chief Economist, Moody's Analytics. Mark, it's great to see you. We're overdue for a catch-up here. Did the data today reinforce your point from yesterday?
I think so, Joe. Yeah, yesterday I was a bit perplexed at the market reaction. I mean, big sell-off. It felt like folks were focused on the strong increase in the core PCE for the quarter. But today's data reaffirmed that while inflation remains sticky, it's not coming in quite as fast as everyone would like. It's not hair on fire. It is coming in, and it will continue to come in, over the course of the next several months. So I think everyone's just a bit more relaxed today. And that, on top of the good earnings, contributed to green today compared to red yesterday. But if you add up both days, we're kind of where we sort of started. So no real change.
Okay, fair enough. It's also worth pointing out that PCE was not the only data that we got today, Mark. We did get University of Michigan sentiment figures and inflation expectation figures, sentiment going down, inflation expectations, at least for the year ahead, ticking up. How should we be thinking about the consumer, the engine of the economy that was what is driving the GDP growth that we are seeing, and how firm they are at this moment, how stable?
They feel rock solid to me, Kaylee. They're driving the train, have been throughout since the pandemic hit, continue to do so. No sign of any kind of weakening in consumer spending, at least not in the reports we got today and yesterday. And they're good for good reason. All the fundamentals look good. Wage growth is stronger than inflation, so people's purchasing power is improving, and that's across the entire wage distribution, low wage workers, high wage workers. Unemployment's at sub 4%, been there for more than 2 years, so that's not changing. So,
but Mark, if all of that is true, why isn't sentiment higher? Why don't people feel better? Bloomberg's polling suggests people feel that the economy is going to get worse, not better, in the months moving forward. So what's the disconnect?
Well, partly you're looking at the wrong index. You're looking at the University of Michigan survey that's biased by people's political prism. I think if you look at the Conference Board survey, Yeah, that's exactly right down the fairway. I mean, they've been doing that survey for decades, and it's a little bit above average, no change in the last 6, 9, 12 months, very consistent with the spending we're getting. So I wouldn't pay much attention. Now, having said that, I do think people, the typical American is still feeling the sting of the high inflation we suffered back in 21, 22, going into 23, and people are paying a lot more. Even though inflation has come back in, people are still paying a lot more for food, for rent, kind of the staples of life. I just got my vehicle insurance bill. I choked when I saw it. So, we're still, inflation's in, and that's great, and that's very positive for future Fed policy and interest rate cuts. But, people are still feeling the ill effects of that high inflation that we suffered back a couple, 3 years ago.
Where are you on interest rate cuts? Are we going to get any this year?
I think so, Joe. I mean, if there were no election, I'd say we'd get 2, maybe 3, but there's an election, and that messes things up. So, I mean, it feels like it's going to take a few months for the Fed to collect the evidence they need that, Zandy's right and inflation's coming in and we're going to be fine. And that probably takes us to the September meeting. But, September is right before the election. You're right in the middle of the election. And, I mean, you've been seeing the reports about what President Trump might do to the next Federal Reserve. They're going to be politicized. They just don't want to do that. Now, not lowering rates when the inflation numbers say you should lower rates is also political, but less likely you get wrapped up in the politics if you don't cut rates. So that means that takes you to the November meeting. But the November meeting is like days after the election. I mean, like literally right after the election. Making a move then feels political. So when you add it all up, given all these dynamics, I'd say 1 rate cut in December, and then quarterly rate cut every quarter next year going into 2026.
Okay, so it might be a while because of the election before you see the support for the economy in the form of policy easing, perhaps. And I would imagine in that same vein, Mark, we should have very little expectation that if something were to break, if things were to suddenly materially soften, but the Fed's still fighting inflation, wants to keep policy tight, that you wouldn't have any kind of fiscal policy stepping in to try to do some of that work either.
No, that's just not going to happen. So the economy's on its own. I do think if something breaks in the financial system, and just as a reminder, when the Fed's got the funds rate at 5.5%, the yield curve is inverted, the financial system is under a lot of pressure. That's one reason why you might want to cut sooner rather than later, so nothing breaks there. Yeah, and there's things to be cautious about in the broader economy. The labor market feels really good, but that's resting on no layoffs, and that feels like something that can change very quickly if there's an event or sentiment shifts among business people and they start laying off workers. So I do think there's a strong argument to start cutting interest rates. And I think the Fed would cut rates if something did break, even though inflation's not quite back to where it needs to be, at least in their book.
Spending time with Mark Zandy from Moody's Analytics here on Bloomberg TV and radio. There's reporting out today, Wall Street Journal story, Mark, that makes you wonder what the Fed might look like if Donald Trump is president again. He's hearing advice, apparently from some of his allies, that there'd be a way to take power away from the Fed and even introduce the commander-in-chief, make the president part of the interest rate decision-making mechanism. This is all blue sky stuff right now, but what would another Trump term mean for the Fed?
Well, it's coming from the Wall Street Journal. I have no other knowledge than that. But let me just say, a bedrock of a well-functioning economy, a market economy, our economy, is an independent Federal Reserve, a Federal Reserve that can make interest rate decisions independent of political factors, or at least as best as they can do. If they're changing policy because it makes for good politics and that trumps what's needed for a good economy, that's just a prescription for disaster. And I think every investor on the planet knows that, and I think everyone would throw up all over that. So hopefully that's just a report, and nothing more than that.
All right, Mark Zandy, Moody's Analytics Chief Economist. Always great to have you here on Bloomberg Television and Radio. Thank you so much for joining us. And while, of course, Bloomberg hasn't independently verified this reporting on our own, we do know that it seems to be allies of the former president, not necessarily the former president himself, but surely
He's hearing a lot of ideas right now.
Exactly. A lot's being thrown at him, and he's throwing a lot out there for that matter. Joe, we did, as we've mentioned, just get a True Social post from Donald Trump in response to the Howard Stern interview Biden did this morning, in which he said he's open to debating him. Donald Trump says, anywhere, anytime, any place, even suggesting a venue, the courthouse tonight on national television.
I think Jordan Fabian gets a facial tick every time there's a post on Truth Social. Having spent time covering the Trump administration, now covering the Biden White House for us at Bloomberg, I'm pretty sure, Kaylee, that we have not had Jordan on the program since he got a question in the Rose Garden when the Japanese Prime Minister was here in Washington. He's driving the news every day from the other end of Pennsylvania Avenue. Great to see you, Jordan. What do you make of this idea of a campaign with no debates? I guess technically we've kind of had one already when it involves Donald Trump. He didn't show up for a single debate on the primary trail. And Joe Biden's trying to figure out if this is a smart move politically. Rick Davis was telling us earlier he wouldn't let his candidate in a debate like that.
Yeah, it would be uncharted territory for a presidential campaign in a television age. These debates have been normalized, routine things that Americans have been used to since the 1970s. They're like highly regulated by this nonpartisan commission. It's this part of the campaign cadence that people come to expect. So if they were not to happen, there would certainly be a void, especially for voters deciding, because these debates traditionally happen later in the cycle. People who haven't made up their mind, those coveted swing voters, they wouldn't be able to hear from those candidates on a national stage, tens of millions of people watching, if those debates were not to happen.
Yeah, it's a really good point. And I guess it becomes a question, as Rick was also pointing out, of the kind of infrastructure it takes to even get these debates in place, that they haven't even begun. How close to the election, realistically, we could even see this happening. In the meantime, though, President Biden does have the advantage of being able to do things like be in the Rose Garden and receive questions from Jordan Fabian, the powers of the presidency, and frankly, the ability to roam freely and not be tied to a courtroom in New York like Trump is right now. How do you think about that split screen? Because Joe Biden literally just returned to Washington from being in New York himself yesterday under very different circumstances.
Yeah, we wrote about this dynamic yesterday. It definitely gives the president a structural advantage. Now, he has a lot of ground to make up. All the polls, including our own, show either a very close race or a narrow lead for Donald Trump, despite all these problems that he's having, getting tied up in court, disapproval on abortion, et cetera. So, Biden needs this time to try and make up ground. And right now, you're seeing him focus on rallying his base. You've seen him make moves like try to cancel more student debt. He appeared with AOC at this climate event on Earth Day earlier this week. So he's using this time to try to consolidate the base, because we just talked about the undecided voters. This is also going to be a base election. Both candidates need to motivate their hardcore supporters to come out, and that's what Biden's trying to get right now.
So what do you make of the calculation to sit down for over an hour with Howard Stern? This is fascinating to me. In full disclosure, I used to work at that company down the hall. But this is the type of thing that Barack Obama did real well, right? Getting in front of regular people. But to put your president out there, or your candidate in this case, for an hour and 15 minutes, uninterrupted, uncensored talk, that could go in a lot of different directions. What does it tell us about the mindset here of taking a risk like that this early?
It's interesting because, well, first of all, the criticism of Joe Biden is that he's been sort of cooped up by his staff, at least last year. The shows they're letting him get a little looser now that the campaign is upon us. They realize they need to get him out there in front of the American people, show him that he can go for an hour or more with Howard Stern to perhaps counter some of those age concerns, some of those concerns about stamina, and that he can sort of have the repartee with someone like Howard Stern, who's going to ask him questions like, how did you meet your wife, and sort of, what was going down at the pool, and when you were a lifeguard and stuff like that.
Yeah, it was pretty biographic, a lot of the interview, it seemed.
This is
kind
your
of
life.
running through the story of Joe Biden.
But that's as opposed to a partisan, right? Or a
Sure.
journalist, like you coming into an environment like this. It's a different proposition when you're talking to a personality like that, right? right?
Yeah, and frankly, Howard Stern has become a pretty solid Joe Biden supporter.
That's fair.
So we shouldn't pretend this was going to be a tough interview.
And a former friend of Donald Trump.
Yeah, exactly. It would be interesting, with this interview happened in 2005, what the tone would have been versus now.
Very good
think
point.
we'd be airing any of that.
Well, and then I guess we'll see if he decides to do network interviews. Let the record show President Biden does have a standing invitation to join us here on Balance of Power, as does Jordan Fabian, Bloomberg White House reporter.
Well, you got to tell him Jordan will be here.
So much.
He'll show up.
Yeah, there we go.
See if that happens.
Incentive.
Is it time to go to New York here? I think it is. Carol Master, Tim Stenovic holding forth on Bloomberg Business Week. We're watching. I could see him talking to you guys, actually. He's going to want to talk to the Business Week, the cool cats in New York, not the political wonks down here.
You know what? If he wants to stop by here on his way from, we'd be happy to
really
chat.
nearby, yeah.
Yeah.
I got to say, a round table with the four of us would be kind of fun. I'm also thinking SNL and Ryan Gosling and President Biden. There's a skit in there. I'm just thinking. Don't you think?
Yeah, we're going to get a little SNL entertainment tomorrow night at the Correspondence Dinner.
Colin
right?
Jost.
That's right. He's
You
doing
guys
the entertainment.
ScarJo will be there too.
Yeah.
You guys got to tell us what went down on Monday. That's going to be fun.
We'll tell everyone we know you, and we'll have stories on Monday. What do you have coming up later?
Hey, listen, we're going to talk about what's going on in the market. We're on track for our best week of 2024. Thank you, AI, Tim.
Yeah, we also got Joe Stiglitz joining us, Nobel laureate. So looking forward to that in just a few minutes.
All right. Good
Always
stuff.
a great listen. Bloomberg Business Week. I'll meet you at 5.
Indeed.
Late edition of Balance of Power, right here on Bloomberg.
Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very happy Friday, everybody. Good afternoon. Live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. Carol Masser along with Tim Stenivek on an interesting day and an interesting week overall, Tim, is certainly for the equity market.
Yeah,
who'd have
stocks,
thunk maybe at the beginning?
Especially at the end of last week with the way that we ended the week last week. We're going to have more on what's going on with the markets in just a minute when John Tucker gives us an update. But Carol, we're on the inflation read and so much more this afternoon because we got more economic data this morning. And although it wasn't great, it wasn't worse than expected.
Yeah, and I think that's what's key here. And that's why you're seeing the equity rally and even yields back off a little bit. Some other economic data points. So with all of that in mind, we've got a great guest coming up. We're going to talk about that a little bit, but more broadly, kind of our U.S. economic picture and really we're going to talk a little about freedom and what it means. Nobel laureate economist Joseph Stiglitz is with us. He's got a new book out. It's entitled The Road to Freedom, Economics and the Good Society. He's got this thesis and his book about a broader definition of freedom. It's needed for all citizens to really live up to their potential economically. So it's a great thing considering the backdrop that we are living in.
Yeah, very much looking forward to welcoming him back to the show in just a few minutes. And Carol, although many stocks are higher today, not every single one of them is, especially that could be said about Intel. The chips are down for Intel, the stock dropping to a nearly 4-year low after a lackluster forecast. It raises the question, what really is the future of the once giant semiconductor company?
It's an amazing story, so we're going to get into that. First up, though, let's get to John Tucker with a check on the trade and your top business stories. John, over to you.
All right, still riding the wave from those blowout earnings we saw after the close of regular trading today from the tech heavyweights. That's sending stocks higher as we close out the week. Google parent Alphabet among the leaders in the S&P 500. Google parent is up 10% right now. And then you have Microsoft. Those shares still are higher, up 2.6% right now. That is the focus. The Federal Reserve's preferred gauge of underlying U.S. inflation, as you were mentioning, rising at, I'll call it a brisk pace for the month of March. Fed policymakers do meet next week. Nobody thinks they're going to do much of anything. Also had earnings from ExxonMobil and Chevron declining after disappointing first quarter performance. I also wanted to bring this headline to you. Paramount Global's board considering replacing CEO Bob Bakish and installing a committee of top executives to run the entertainment giant on an interim basis. At least this is the reporting that we're getting from the Wall Street Journal. S&P 500, 61 points higher. That's a rise of 1.2% right now. We're at 5109. Dow Jones Industrial Average, 230 points higher. That's up 0.6%. The tech-heavy NASDAQ Composite Index, that is up 334 points, a rise of 2.1%. And the two-year yield, unchanged. A hair under, well, let's call it 5% again, 4.9954. 10-year yield, 3 basis points lower. That's at 4.67. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Tim and Carol.
All right, John, so appreciate that. Well, our next guest follows the U.S. economy, really the global economy, has for decades, weighing in on the trends that describe us and divide us financially, economically, and so much more. Let's get to the interview this hour. With us is Nobel laureate economist and Columbia professor Joseph Stiglitz. He was an economic advisor to presidents, including chair of the Council of Economic Advisors. That was during the Clinton administration. Former chief economist at the World Bank. He's written numerous books and research papers. His latest book, The Road to Freedom, Economics and the Good Society. He joins us here in New York City. Professor Stiglitz, so great to be talking with you once again. It's been a while, but great to have you here. And we want to talk about the book, but we would be remiss not to ask you your take on today's economic environment and the stickiness of inflation. What is the smart conversation that you think we should all be having here at Bloomberg when it comes to today's U.S. economic environment?
From the point of view of economics, having 2.5% or even 3% inflation is not a big deal. You know, the 2% target was pulled out of thin air. It was not based on economic science. What we want to be sure of is that we don't have runaway inflation. And inflation has clearly been tamed. It's been brought down. It's stable. It fluctuates from month to month. But it is not a major problem. We should be focusing on other things, continuing economic growth, making sure that all Americans share in that growth. Those are the kinds of things that we ought to be thinking more about.
So, Professor Stiglitz, should the Fed abandon the 2% inflation goal? Should they have a different inflation goal, a different metric that they should be held accountable to?
Yes, I think they should. I think they should be talking about keeping it within a range, 2 to maybe 3.5%, 4%. You know, there's actually some economic science that says, especially in a time of major structural change, such as we're going through, having a little higher inflation actually is helpful in reallocating resources in the presence of downward nominal rigidities of wages. Because what guides the movement of resources from one place to another is relative wages. And if some wages are sticky downward, you want other wages to go up enough to move labor. And that means you're going to have more inflation. So actually, a little higher inflation is actually good for the economy.
Do you think the Fed's management of the economy has been a good one in terms of policy?
Quite frankly, no. To put it bluntly, let's go back to when inflation broke out after the pandemic and the Russian invasion of Ukraine. The question was, what was the cause, the primary cause of the inflation? It was unambiguous. It was the pandemic and war-related interruptions in supply chains, rising prices caused by shortages of oil and food. It was demand shifts. People wanted to live in different places. And that meant housing prices went up where there was a scarcity, but didn't go down as much where there was where people didn't want to live, like in parts of New York. Raising interest rates actually impedes the ability of the economy to respond to that kind of structural, to that kind of challenge. We needed to build more houses in the places where there was a scarcity. And having higher interest rates actually makes it more difficult. They also have a model of the economy that's based on competition. That might have been true some time ago, but we have an economy with a lot of market power. And firms are trading off. If they raise their prices, they get more profits today. They lose profits in the future. And in that trade-off, when you raise the interest rate, they value those future losses less, and they're induced to raise their prices more. So margins go up. And a marked aspect of the inflation that we've just been through is that markets have increased enormously.
Hey, Professor Stiglitz, I just wanted to, speaking of the Fed, Carol, I know you had
Well, one thing before we have a bigger, broader question that's certainly been
Carol's
a big
eager
thing.
to jump in on this.
Well, but do you think then we should be cutting rates already, that we're behind the curve right now?
Yes, I think the risks are asymmetric. I think with Europe already slowing down in recession, we don't know where China is going to be going. I think prudence would have us going back to a more normal interest rate.
Yeah.
The higher interest rates are really not going to be taming inflation. The Fed model was wrong in another way. They dramatically had said that we're going to need 5% of inflation for 5% unemployment for some time in order to get inflation down. They were absolutely wrong. We got inflation down where in a period where we kept unemployment relatively low. So their analysis of the economy was just off. And meanwhile, they have put at risk our banking system. We had a problem in Silicon Valley Bank, partly because of the enormous changes in term structure, which their policies led to. And we're facing a debt crisis in the developing countries and emerging markets. So there's enormous one-sided risk, I believe, in the policies that they've been pursuing.
Well, on the Fed, Professor Stiglitz, I got to ask you about this Wall Street Journal report that broke last night that said how former Trump administration officials are coming up with plans to take on the independence of the Federal Reserve, essentially at one end of the spectrum, even allowing, if President Trump gets reelected, him to weigh in on Fed policy when it comes to interest rates. Talk a little bit about your reaction to if this were to come to fruition, how important the independence of the Fed is, and if that would really put at risk the model of the independence of the U.S. financial system.
Well, I think Trump is himself a major argument why you want to have independence of the Fed. You don't want somebody who doesn't understand monetary policy, who would put at risk the long-run stability of the economy for the short-term electoral advantage of having a hot economy right before an election. That's precisely why there is an argument for independence. So, I believe in accountability of the Fed. It is a public institution. We had previous chairman of the Fed were very cognizant of that. I remember Paul Volcker saying, Congress created us and Congress can uncreate us. So there is a kind of accountability that responsible heads of the Fed understand, but we certainly don't want Donald Trump to be running monetary policy.
All right, we do want to dig into your book because you've been thinking a lot about the meaning of freedom, and I think we throw the word around a lot. I think the folks who created the United States, our founding fathers, thought about freedom a lot. And the difference, though, between what that really means, and maybe it comes down to, as you think about it, the values that we all have in society. Tell us about how we need to kind of maybe redefine freedom and what it means in terms of citizens more broadly and generally, as well as economically, in terms of their success.
Sure. I approach the issue, obviously, as an economist. And as an economist, we think of freedom as free to do, what you can do, what are the choices that you can make. Somebody who is at the point of starvation doesn't really have any freedom. He has to do what he can to survive. And so expanding the set of choices that an individual is available is a way of saying that he has more freedom. And here there are a couple of ideas I put forward in my book. The first is that in our integrated urban 21st century economy, what one person does, the expansion of his freedom may lead to less freedom of others. Isaiah Berlin, the great Oxford philosopher, put it this way. He said, freedom for the wolves has often meant death for the sheep. And in the context of the U.S., for instance, freedom to carry an AK-47 means that people will die. And it means that our school children are not free from fear. They have to learn what to do if a gunman comes into the classroom, and teachers have to go to school worried about whether they'll be attacked. Freedom not to wear masks is taking away the freedom of others to live. So we have to balance these freedoms. There are trade-offs. In many cases, those trade-offs are easy. Freedom to pollute takes away the freedom to have somebody with asthma to even live, let alone the freedom of all of us to live on our planet. So there, I think we have to constrain the freedom of the polluters and the freedom of the exploiters.
So we're talking with Joseph Stiglitz, Nobel laureate economist, professor of economics at Columbia University, and we're talking about his new book, The Road to Freedom, Economics in the Good Society. All right, so if we rethink, Professor Stiglitz, the idea of freedom, so it's maybe more inclusive or it's a broader definition, how do we do that within society with corporations the need to be profitable for those. We're in earnings season. We look at companies and their reports, and that's how we kind of measure them, grade them. What does government need to do? How can we maybe be better, if you will, for more?
Well, first, let me emphasize that in the world I've just described, there's an important role for regulations. Corporations often don't like that, but we have to remember the purpose of our economy is to improve the lives and livelihoods of our citizens. It's not the other way around, that the economy is supposed to serve society, not the other way around. There's another aspect. Regulations can actually expand the freedom of all of us. Think about stoplights. If we don't have stoplights, we have gridlock. None of us has the freedom to move. Stoplights, which are a little bit of coercion, mean that I have to take turns. But by taking turns, we all have more freedom. And that basic idea extends much more broadly. People don't like to pay taxes. They often feel a little kind of coercion. But when those tax revenues are used productively, like they were to invest in the internet and invest in the mRNA platform that led to the vaccine against COVID-19, that expands our freedom to do.
Right.
And so we have to look at this I would say, in a little bit more holistic way.
Well, I want to go to your taxes point, because I'm curious if you could wave a magic wand or implement some sort of tax policy here in the U.S. What would it be? How could you reinvent it? Would you broaden the tax base? Would you lean more on corporate taxes? Would you tax wealth more? What, in your opinion, would work?
Well, I begin by analyzing what are some of the key problems our society faces. And one of them is inequality. One of the reasons, and a second problem is the growth of market power, which has been enormous in the last few decades. And those two are obviously linked. When you have more market power, the fruits of that market power go to those at the top. We also have more, economists call monopsony power. Firms have market power over workers and have driven down their wages significantly below a competitive level. So I want to have more antitrust policy, more competitive labor market policies, but that's going to take time. In the meanwhile, there's a lot of monopoly rents. And so part of what I would begin by doing is increasing corporate profits taxes, which are not a tax on return to capital. They are a tax on this monopoly profits. I'd also like to have environmental taxes. Firms that are engaged in polluting the environment ought to pay for the damage that they're doing. Remarkably, America, those at the top, pay a lower percentage of their taxes than those down below. Even some of our richest people have commented that they think that's morally wrong.
Well, can I ask you, like on a day when we're looking at a company, and forgive me, I'm just singling out because it popped, shares of Alphabet are now a $2 trillion market cap company. This week, next week, last week, we've been obsessed with certainly what we call the Magnificent Seven, the big mega cap tech companies. They're very big. Amazon, we talked with an author recently, so entrenched certainly in our world, and you think about their reach. Are these the companies, the individuals, whether it's an Amazon, whether it's a Meta, whether it's an Alphabet, that you think, you talk about growth of market power, is it too much at this point, in your view, that something needs to be done to rein them in, or do the benefits outweigh the downside here?
Well, they do give benefits, but they have a lot of downsides. They need to be better regulated. Europe has done a better job at regulating them. The digital harms are quite obvious and have been by now well documented. But talking narrowly now about market power, I think we ought to do what we can to limit their market power. But tax the fruits of that market power, the revenues that they get, at a much higher rate. If you ask the question, would Jeff Bezos or the founders of Google or Zuckerberg stop working if we tax their wealth in a way, say, of 3%? And the answer is obvious. They would continue to work.
But do you think that they would leave the United States?
Well, we have imposed what we call an exit tax, that those with a lot of wealth and who don't feel loyalty to the United States can leave. We allow them to leave, but they have to pay a tax that represents a tax on the fruits of the wealth that they've accumulated while they've been in the United States. And that tax is significant and it is a deterrent. And if it's not, it may be that we ought to consider raising that tax. But I don't think people like Zuckerberg, Musk are going to leave the United States. They realize the benefits of American citizenship.
We're speaking right now with Professor Joseph Stiglitz, Nobel laureate economist. He's a professor of economics at Columbia University. He's got a new book out, The Road to Freedom, Economics and the Good Society. Professor, as I mentioned, you are up at Columbia. You've been there for a long time. We've been watching everything that's been happening on the campus there, as well as campuses including USC, Yale, MIT. The list continues to go on here in the United States as we've seen pro-Palestinian protests and encampments take over some of these campuses. Freedom in the academic context. How are you looking at the protests in the context of freedom of speech?
That's a good question. I mean, first let me comment that up at where my office is, which is the Manhattanville campus, things are very quiet.
Near the business school.
At the business school.
Yeah, quiet there.
But you've been on campus a long time, and you've seen different protests over the years, and it seemed to be, I was there when there were protests, and it seems like that's what students should be doing, exploring and pushing back when they don't feel like things are right. But what is it, those protests in the context of freedom of speech?
So I agree with you very strongly. I'm actually happy the students are engaged in the world. That's one of the things I try to get them to be interested in the world, and also to reason about the world, to come to understand it, and to debate how could or should things be changed. So that's a good thing. And in my own life, protests have played a very important role. Back in 1963, I was down there in the March on Washington with Martin Luther King. And, that speech he gave about I have a dream has been a lifelong inspiration to me. So even civil disobedience in certain circumstances can be an important mechanism for social change. We have a special responsibility, of course, to make sure on our campus that all views get heard, that we can have civil debates. And so on the one hand, academic freedom is really important. And I really took offense to Speaker Johnson coming up to our campus and calling for the resignation of our president. I hadn't seen anything like that, maybe since the HUAC hearings, the House Un-American Activities Committee, back with McCarthy in the 50s. I mean, that kind of direct interference in academia is just unheard of. And we know some of the Republicans have been trying to undermine universities, because universities teach children how to, our youngsters, our young men and women, how to think. And a lot of people don't like that idea that they should be thinking for themselves. But at the same time, we have to create on campus a community where all voices are heard. And I think we're actually working very much towards that. There were only a few people raising problems, And I think having outside agitators like the speaker is not helpful.
We're going to leave it on that note. We always appreciate hearing, you talk about hearing from voices. We always appreciate hearing from you. Professor Stiglitz, thank you so much. Nobel laureate economist, Columbia professor Joseph Stiglitz here in New York City. Check out his book, his latest book, The Road to Freedom, Economics in the Good Society. Really appreciate spending some time with you. And right now, let's get a check on the markets. We've got a trade underway on this last trading day of the week and some top business stories, some stuff going on here, John Tucker.
Well, Alphabet and Microsoft, like a broken record, leading the overall market toward the finish of its first winning week in the last four. Those blowout earnings renewing the AI frenzy. And the numbers back up the idea this isn't just some flash in the pan. The earnings scorecard, 228 stocks in the S&P 500 overall have opened their books over 80%. Delivering positive earnings surprises. Tech and healthcare delivering the biggest surprises there. Report this morning showing inflation remaining stubbornly high. This is the measure of prices for March that the Fed prefers to use. Wasn't much worse than forecast. Interestingly enough, we heard Professor Stiglitz there arguing for cuts and saying the Fed should scrap that 2% target. S&P 500 right now is up 57 points. That's up 1.1%. The Dow Jones Industrial Average, 201 points higher. That's up 0.5%. The Nasdaq Composite Index up 320 points. That's a rise of 2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
John Tucker, we're not worthy. I'm just going to say that.
Oh, you are worthy. I'm not going to say it. What?
Well done, well done. Thank you so much. John, talking about some of the comments that we just got from Joseph Stiglitz when it comes to rate policy. Listen, at this point, though, what we see and what we've seen played out, traders fearing another ultra-hot inflation report got a degree of relief. You could almost hear the sigh after the Fed's favored price gauge came roughly in line with estimates. Later, we had, and that was actually earlier this morning, separate data showed U.S. consumer sentiment falling in the month of April on dimmer views of personal finances and the economy as inflation expectations climb. But it was this kind of sigh of relief. It didn't come in, at least on the inflation print, Tim, worse than forecast.
So tying it all together is Bloomberg News rates reporter Michael McKenzie back here in our Bloomberg studio. So the inflation print shows us that we're still high, still for longer, not worse than expected. Give us the big takeaways from the economic data that we got this morning, the sentiment data as well, because we certainly see the market reaction.
Yeah, I think it's definitely a relief, although that sense of relief is fading as we get later into the day here. 2 years getting back towards the 5% level.
The blue is off the road.
It's a modest relief. And talking to a few people this morning in the market said, look, we were all amped up for this, another confirmation that March actually was a hotter month compared to January, February. March held in, but the takeaway is the first quarter was a lot stronger than people expected, and the bond markets reacted. It began the year expecting 6 rate cuts. It's now down to basically 33 basis points a cut, so 1 and a little bit. That's it, and maybe not until December.
We talked yesterday, though, about the quarterly inflation print, right? And then the importance of, though, getting this number and that it wasn't another uptick, that maybe that's an indication.
Yeah.
I don't know if we're kind of slicing hairs at this point,
I think
but
potentially, because I just read a piece from our colleagues, Molly Smith on the economic side, and she made the point that actually it came in at 0.32. So it wouldn't take much for it to be rounded up, you see. So again, you want to split hairs, you can kind of make a case for either side here, really.
Listen, in terms of making a case, we just talked with Joseph Stiglitz, Nobel laureate, follows certainly the economy for a long, long time, and he's like 2.5%. Like, these things shouldn't really matter. And I do wonder, speaking of splitting hairs, I mean, are we like?
Is the Fed shooting itself in the foot?
Exactly.
Yeah.
Like, this importance of getting to that 2% and kind of sticking there.
The view I sort of tend to agree with when I talk to a lot of people is that there's too many Fed speakers. Too many people out there. So this is why Powell is so important on Wednesday, because he gets to set, it's almost like he begins with a blank canvas, right? He says, right, this is what we're thinking. He reflects the committee. They'll spend Tuesday and Wednesday sitting down, talking, debating, working out, okay, where do things sit? And so the market is looking for a good message from Powell, just a sort of honest appraisal of where we stand. But ultimately, yes, the Fed should start to ease policy once you get inflation down into that 2.5% level. This is a point that Rich Clarida from PIMCO last year told Tom Keene. He said, Is this a Fed that wants to start easing when it's running at 2.7, or is it a Fed that's actually only going to ease until it gets down to, say, 2.1, 2.2? So it doesn't really matter when they go. In fact, and a Fed should be easing because ultimately the economy will be slowing down, and you want to be ahead of that. That's how you actually nurture a soft landing.
So it should be easing now.
I think they still need to wait a little bit longer. So I don't think you can rule out a rate cut potentially in September if the data begins to suggest that things are starting to cool down after what has been a pretty hot start to the year, or hotter than people expected. So this is why the market at the moment, it's kind of been bruised and battered. We've had a 5-week-long sell-off in yields. We're kind of back towards these levels that we saw late November, early November, sort of late October. So we've had a big repricing, but we still got a long way to go until you get to September. So I think that's kind of probably the way Powell is going to sort of frame things when he speaks next week. He's still got time, still be patient, still watching the data, of course. But at some point, they will start making these what they call risk management cuts in the funds rate.
But Michael, based on the folks who you talk to every day, is it realistic for us to be thinking that when the Fed does, maybe if, successfully slay this inflation beast, they revisit this 2% target which, many people have argued, including Joe Stiglitz just now, was essentially pulled out of thin air?
Yeah, it's all New Zealand's fault. It was the Reserve Bank of New Zealand that came up with this. But again, that was because of what had happened in the 70s and for much of the 80s, right? Central banks were struggling to contain inflation. Even though everyone lionizes Volcker for crushing inflation, he didn't really get it back down to 2% in the 80s. It was still running a lot hotter than that. So the Reserve Bank of New Zealand came out with this idea. Okay, let's just put a number on it, 2%. And we've stayed with it. So yeah, you can come back and revisit that. The only thing I would say, though, is it would require a lot of communication skills from the central bank, because don't forget, the deficits have been exploding. We have a lot of debt. And if you sort of unleash the hound, so to speak, and say, hey, we're going to sort of live with a 2.5%, maybe 3% inflation, the bond market's going to go, hang on, it's time to dust off the bond vigilante cloak and go back to the early 90s again. So I think it'd be and this is why I think Powell and others, when they're asked this question, always smack it down. No, 2% is our target. And I think they'll stick with that for a while yet.
What about, where are we on real yields and the impact of that?
We're getting into that sort of heading towards the 2.5% area, which is, again, if you talk to some people in the market, they'll tell you once we get through 2.5%, equity market will be in trouble. But then we've heard this for so long that tech stocks, for example, wouldn't really like to see higher yields. But again, as a lot of people have been saying on TV here and radio, if you look at Alphabet and other tech giants, they're self-funding. Yeah. They don't need
to go and borrow. They're making money on all that cash that they've got sitting somewhere, right?
Alphabet, by the way, at a record high, would like a word with those folks.
Yes.
Hi, I'm worth $2 trillion now. My market cap. Yeah, it's kind of an interesting environment, right?
And we are in this. And we're in this environment too, where the boomers are retiring or have retired. That's a big chunk of the population. They're now getting 5% on their money market funds. They're able now to cash out of record-priced equities and stick the money into income, because fixed income is back.
Jay and Jobs, that's the big focal point, just quickly.
Totally, yeah. Thanks.
Yeah, no doubt about it. Sounds like a new band group.
Jay and
the Jobs.
He's a Grateful
That's a better ring to it.
What?
He's a Grateful Dead fan.
He is. Cover band, right, baby? Michael McKenzie, thank you so much. You've guided us so much through the week and all the gyrations of eco and the rates market. Michael McKenzie, rates reporter here at Bloomberg News.
Hey, let's get a check on the latest world and national news with Amy Morris in the Bloomberg 991 newsroom in D.C. Hey, Amy.
Hi, Tim. The Pentagon sending more Patriot missiles to Ukraine in a new $6 billion aid package. Defense Secretary Lloyd Austin.
If Putin got his way in Ukraine, his fellow autocrats would draw a dangerous lesson. And the whole world would become more chaotic and insecure if would-be aggressors believe that they can rewrite borders by force and make people live in fear.
Defense Secretary Lloyd Austin. The package includes additional gear to integrate Western air defense launchers, missiles, and radar into Ukraine's existing weaponry. President Biden is willing to debate Donald Trump ahead of the November presidential election. During an interview today with radio host Howard Stern.
Can I tell you a fantasy I had? I don't know if you're going to debate your opponent.
I am somewhere. I don't know when. I'm happy to debate him.
Biden previously had declined to commit to debating Trump, saying his participation would depend on, quote, his rival's behavior. Trump responded on Truth Social, saying that he would debate Biden, quote, anytime, anywhere, any place. And an update for you on the royal family. King Charles will resume his public duties next week following treatment for cancer. Buckingham Palace says Charles will make a public visit to a cancer treatment center on Tuesday. This will be the first of several appearances that he'll be making in coming weeks. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks headed toward their best week in 2024. And Microsoft and Google's parent Alphabet delivered those bang-up earnings after the close of regular trading yesterday. As we look at Microsoft shares, they're up 2.4%. And Google parent Alphabet, those shares up 9.5% in today's trading. And it's information technology, communication services, the best performing groups in the S&P 500 today. The Dow Jones Industrial Average, 203 points higher. That's up 0.5%. We're at 38,293 on the index. The S&P 500, 58 points higher. That's up 1.2%. The NASDAQ Composite Index, 2% higher. That is up 320 points. And as you pointed out, Tim, it's worth mentioning Google parent Alphabet admitted to an exclusive club entering the realm of...
Did you leave me out for a reason?
$2 trillion. Well, I think you were thinking about it. The realm of the $2 trillion market cap as the stock today hits a record. And we also had that inflation data today, not having much of an impact. 2-year yield, 4.99, just below 5%. The 10-year is 3 basis points lower. That's at 4.66. Heating season in the Northeast almost over. And natural gas, quick look there, flirting with its lowest levels in nearly 29 years. That kind of helps the inflation picture.
It was cold. It's been cold, though. I keep the heat on right now. Just saying.
Do you have natural gas or oil or electricity?
We have, like,
you don't know.
I don't know.
Anyway, we check the markets for you.
Just
I could say something,
Honey,
but I
is the
won't.
heat on?
Does any of this surprise me?
It's something. It's something.
Yeah.
All right. What also is something is John talking about this in terms of earnings that we got after the close yesterday. Intel shares, folks, they are down the most in not quite 4 years, but they're still down about 9.5% here. This is after the company gave a lackluster forecast for the current period. And turning this giant, Tim, as we find out, they're in the midst of a turnaround. It's not turning out to be so easy.
Yeah, in fact, here's Intel CEO Pat Gelsinger on the good and the better to come. He joined Bloomberg TV and radio a little earlier today. Check it out.
We delivered a solid Q1, right? We met on revenue. We, beat on earnings, a bit tepid in the first half, as we said, but we see a lot of, improvement as we go through the year. And with that, obviously, the foundry business, as I would say, we're going to see progress on the foundry business every quarter from now to the end of the decade.
That's Pat Gelsinger, Intel CEO, earlier on Bloomberg TV and radio. With more on the company's business and planned turnaround, back with us is Bloomberg News U.S. semiconductor and networking reporter in our San Francisco bureau, Ian King. So, Ian, the quarter, what occupies you the most on the release and then after the call with analysts yesterday? Because as Carol mentioned, the reaction to the report, at least when it comes to the stock, was really swift.
Yeah, I think the quote you played from Pat is irrelevant here. I mean, you've got a man who hasn't been back at Intel for that long, putting a long-term plan together, trying to repair the mistakes made over a decade. Though that plan won't pay off anytime soon, but in the meantime, he's having to give quarterly earnings, and anything that's kind of lackluster as the forecast was yesterday is going to cause concern, and that this long-term plan isn't going to pay off. So he's selling a bright future while talking about a kind of lackluster interim period.
It makes me think about, like, every once in a while, I bet a company would just be like, can we just go public for a few years and kind of clear things out, do the reboot, and then we'll come back to the public markets. We've seen it before, but I almost feel like potentially, Ian, that's what Intel needs right now.
Yeah, I mean, that's definitely something that's been talked about by, people who sort of look at Intel and where they are, and that's, that's the position they're in. As we've said, that there's going to have to be significant changes, not just at Intel, but in this semiconductor industry in general, for this big plan to pay off. The analysts like the strategy, say he's pressing the right buttons, but again, so many variables, so many things have to go right for everything to pay off and Intel become at the level it used to be at.
One thing I want to ask you, I mean, the foundry business is an expensive one, right? I just talked with some investment folks. I was planning for a panel that I'm going to be doing in a couple of weeks. They have lots of money to invest. And one of the themes that was top of mind was reshoring and the amount of money that they need to invest, the capital spend that we are seeing in the likes of things like semiconductors and the industrial space as a lot of countries, including the United States, are bringing things back home. It's real. And some of it has to do with climate change and, you know, companies trying to kind of clean up their supply chains. And so closer manufacturers help them do this. This foundry focus, will it pay off in the long run or TBD?
It's very much a TBD. I mean, as you said, there's a geographical trend here. Intel is building plants in the US. Well, guess what? So is Samsung. Guess what? So is TSMC. If you are out in the market for somebody to make your chips, who are you going to go to right now? We need to remember that Intel is giving over 30% of its high-end business to TSMC because its plants aren't good enough right now. Obviously, they plan to change that. Obviously, they plan to reverse that. But again, that's still at the kind of planning implementation phase. So even if you trusted Intel with your crown jewels, why would you do that right now? And that's the problem.
And you mentioned that the CEO, Pat Gelsinger, hasn't been back at Intel for very long. He got back there in February of 2021 when he embarked on this turnaround. I'm wondering about patience that investors have. Based on the folks you talk to, your sources, what kind of patience or timeline or runway are they giving Gelsinger here?
Well, I think you just have to look at the stock performance. I mean, this year they're second worst performer on the Philadelphia Semiconductor Index. That's not a good recommendation. That's not people excited about his company. And, you know, all of the reports, all of the notes say exactly the same thing, which is why would you choose to own Intel right now? And the answer is you probably wouldn't. So that's a struggle that he's going to face. How that manifests itself, how the board think about that, we don't know yet.
All right. It's still almost $135 billion market cap company. Nothing to sneeze at. So what is the value that is Intel at this point?
Well, the value is they are an incumbent still. If you're going to make a standard industry server, you're going to use an Intel Xeon. If you're going to make a PC, more than likely you're going to use one of their core processors. So that, you know, there's still a lot of value there. If they can get the manufacturing back to anything like the level that they used to be at, that's a tremendous asset. Very few companies in the world can actually do that. So all of these things, again, if they manifest themselves in the right direction, are valuable. The problem is, you know, he talked yesterday about, oh, we're getting into the accelerator market. We're going to have $500 billion of fresh revenue from this new product we've got. And again, that's great. But then you have to compare it to where you might put money. AMD is going to have $3.5 billion from that exact same market. And guess what? This year, if analysts are right, NVIDIA is going to have a $96 billion market. So that's $96 billion versus $500 million. Who are you going to choose?
Who do you compare Intel against? Last question.
Sorry, say that again. Sorry.
Who do you compare Intel against? Like, I just think about it. Like, we always talk with you that there's a lot of different names, you know, that make up the stocks in the chip space, and they're not all the same thing. So who do you compare Intel against at this point? Is it AMD? Is it, like, who is it?
Well, you'd have to compare them to a combination of AMD or NVIDIA and TSMC. Okay. And by any metric, they just don't measure up right now.
How much more time does Gelsinger have? I lied. I had one more question for you. How much more time, Ian, do you think Gelsinger has? And is he the right guy to do it?
Like I say, everybody who, you know, all of the analysts say, yes, he's got the right plan. Some of them are concerned that he was put in place too late, that things had gone too far. According to what the timeline he's setting out, Intel should be back in the lead in manufacturing next year. That is going to be the real tipping point, the real point where, hey, Intel is back and things are going to start to work in their favor. So sometime next year, he's either going to be right or we're going to be looking at him and saying, hey, Pat, you told us and you're not there. I think that will be a significant point for both his tenure and also for Intel's future.
In a sign of the times, Intel down almost 10%. I'm looking at the stocks. It's actually up, folks, 2.5% today, and a lot of it is NVIDIA. It is an outperformer, and this is on all the AI excitement, again, coming off of Alphabet and Microsoft.
Intel down 37% so far this year. Ian King, Bloomberg News U.S. Semiconductor and Networking reporter, joining us from San Francisco. Check out all his stuff on Intel.
Coming up, a big week for stocks. Could be the best one so far in 2024. Options Inside. That's next.
headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company news that we are following. And speaking of AI, Sam Altman of OpenAI and the CEOs of NVIDIA, Microsoft, and Alphabet, among the tech industry leaders joining a new federal advisory board. This is going to focus on the secure use of artificial intelligence within critical infrastructure in the United States. This is the administration's latest effort to fill a regulatory vacuum. It's called the Artificial Intelligence Safety and Security Board, and it's part of a government push to protect the economy, public health, and vital industries from being harmed by AI-powered threats. They're all going to get together to develop recommendations for power grid operators, for instance, transportation service providers, and manufacturing plants, among other things, on how to use AI and try and bulletproof their systems against any abuses or when, the robots take over and try to eliminate us. Poultry producers...
Then they're going to be the good robots that beat the bad AI
Well,
robots.
this is what they're trying to come up with. Poultry producers like Tyson Foods will be now required to bring salmonella bacteria in certain chicken products to very low levels. They're trying to help prevent U.S. food poisoning under a final rule issued today by U.S. agriculture officials. This is kind of a head-scratcher. Whirlpool struggling to sell large appliances, so they're hoping you're going to pay big appliance prices for high-end espresso machines. The company launching a new KitchenAid automatic espresso makers this month in the U.S. that costs as much as $2,000.
Be sure to ask.
Just go to Starbucks.
Be sure to ask Tim about
But if you
his
go to Starbucks
coffee
every
machine
day,
later on.
John.
Yeah.
Tim, how much did
But
you
no,
pay for your coffee
you look at the
machine?
machines upstairs, they're constantly doing maintenance and cleaning them. It's tough. Anyway, that's your company news.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Investors hyped over AI again with stocks on track for the best week this year. That is the backdrop for today's Options Insight. With more, here's Bloomberg News Chief Markets Correspondent Abigail Doolittle with Scott Bauer, Prosper Trading Academy CEO. And Abigail, I hear the VIX is front and center today.
VIX is front and center, Carol, for certain. Scott, thanks so much for joining us today. And you are one of the experts on the VIX, the way the math works, the way that it charts, everything about higher high yet. But what are you thinking about the VIX? And what are you seeing this week?
Very interesting paper flow. I was actually in the pit for most of the week. Lots of sellers, Abigail, lots of sellers closing out upside call positions. So in May and in June, yesterday there was a massive seller of the May 36 strike calls. So we're talking about these calls that, had been bought previously over the last several weeks, maybe a month ago, that were really far out of the money. So, somebody, institutions, whoever it might have been, looking for a major drop in the market and a major pop in the VIX, and we never really saw it. What we did get, when the market was selling off for a fraction of time here, we did get a little backwardation, meaning that the front month VIX future actually got to a point where it was slightly higher than the May and the June future. Normally that lasts for a week, 2 weeks or so. This one lasted for just a couple days. So to me, it really looked like the people that were looking for the big market sell-off, boy, they were getting out of their VIX positions when we kind of got that sell-off.
So there was a moment of broader fear when the VIX did go into that backwardation. I'm wondering, Scott, when I take a look at the VIX chart, VIX right now is holding down on its 200-day moving average, 50-day moving average, really finding support, holding a near-term uptrend. And when I take a look at the weekly chart of the S&P 500, the uptrend is broken out of the October lows. Very, very heavy chart, suggesting, at least to my eye, that we could see some more weakness ahead. Is there anything that you're seeing within those VIX contracts, those options, that says that some people are still looking for some sort of a more significant sell-off?
I'm seeing a lot of put sellers rather than call buyers now. So that could also be someone saying, hey, we're not maybe expecting VIX to get back to 20, 25, whatever it may be. But also, as you said, we're at some big support here. We don't see it going much lower. So they're looking to take advantage of the premium by selling those lower strike puts.
So a new normal of where the VIX might be, maybe 15 the low. And then in about 15 seconds or so, Scott, to your knowledge, do most people use the VIX as an outright bet on a big market sell-off, or do most people use VIX as a hedging tool? for long positions?
On the retail side, I think it's more of an outright position looking for a market sell-off. From the institutional side, it's probably more of a hedge against other things that they're doing.
Great stuff. Scott Bauer, Prosper Trading Academy CEO over there. Thanks so much for joining us for Options Insight. Carol, back to you.
All right, Abigail, thank you so much. So appreciate that. For those of you watching on television, the close is coming your way in just a moment. For those of you staying with us, Bloomberg Business Week, we're going to continue on radio, YouTube, and Bloomberg Originals. And coming up over the next couple of hours, we've got to talk, we know we're all focusing on Alphabet, but there's the other company in the social media space that really popped in the market today.
Yeah, we're talking about Snap surging, having its best day in years. Mandeep Singh is back with us, and he's going to give us his take on what's going on with Snap.
There's also more. We talked about it with Professor Stieglitz up at Columbia, a little bit about this, the Wall Street Journal story that gets into whether or not the Fed independence could be at risk under a Trump administration. So that's something we're going to dig into. And we got a question for you.
Are you burned out?
Sometimes a little.
Okay, we got maybe a book for you.
Yeah.
The Cure to Burnout.
Fingers
Just
crossed.
a book?
Yeah. Or maybe it's just being Friday, we can all be happy. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are just 1 hour away from the closing bell on this Friday, getting ready to wrap up what will be the last full trading week in April, right? Because next week, we kick off a new month.
Oh, yeah, we got May right around the corner.
May right around the corner. You know what April showers brings?
No, we were both going to come up with pithy little...
What is it? What is it?
By come up with, I mean just repeat things.
May showers?
April showers
bring May flowers.
flowers.
Sell in May and go away is the other
What is the
one I was
poker
thinking
question?
of. What's the what?
I don't know. All right, we'll get back to it a little bit later on. We digress, or I digress. Stocks are having a pretty good week, so we're going to get into certainly that. You talked about what? Snap. That's something we're going to focus on.
Yeah, the Wall Street Journal story about Fed watchers. Also, this is a fun one, Carol. It's the big take. It's among the most read on the Bloomberg terminal. It's the real estate billionaire known for ambitious New York projects. He's staking his legacy on Florida's epic wealth boom.
You'll know exactly who he is. Very entrenched, certainly when it comes to real estate. And folks, we've got a question for you. We teased it last hour. Are you burned out? Are you burned out, John Tucker?
You can't tell. Working with you two?
Yeah,
of
that'll
course.
that'll do it to anybody. We've got the author of a new book on how to build resilience at work. I have to say, this book we've been passing around kind of our little group, and everybody's been kind of reading a little bit of it.
It's why Charlie goes on vacation, because he can't deal with us. So don't worry, John.
We are a little tough sometimes. All right, let's get a check on the trade today. And your top business stories, here is John Tucker.
All right, less than an hour from the close, and we're on track for the best week of the year. Google parent Alphabet at a record. Also got a market cap now that's crossed $2 trillion and beyond. The earnings results from Alphabet, Microsoft renewing the love affair with artificial intelligence, and they can actually back it up with the numbers now. Not a flash in the pan. Market lift from AI may not be over anytime soon, at least according to Gene Munster. He's with Deepwater Asset Management.
This is a pretty unique dynamic we're seeing, not only in terms of the demand side, whether it's NVIDIA or AMD, they're just breathtaking reacceleration, but also on the demand side for the actual products, not just building, but what we saw with Google Cloud and Azure.
Right now, the S&P 500, 61 points higher. That's a rise of 1.2%. Above 5,100, 5,109 on the index. The Dow Jones Industrial Average, 217 points higher. The NASDAQ Composite Index, 333 points higher. That's up 2.1%. We did get data today, the preferred measure of inflation for the Fed, rising at, I'll call it a brisk pace for the month of March, but not as bad as some expected, so yields didn't exactly surge. Traders increasingly cheering any indication the central bank's going to be able to cut it all this year. And the University of Michigan reporting its consumer sentiment index down. About 38% of Americans surveyed there say inflation is crimping their standard of living. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Carol and Tim.
Thank you so much for that update, John Tucker. Well, what a difference a week makes. Remember where we were at the end of last week?
Different tone, right?
Yeah.
To say the least.
Well, a rally in the world's largest tech companies today, lifting stocks. We just heard all the details from John Tucker. Also, Wall Street, again, breathing a sigh of relief after that recent economic data that John mentioned did not further erode the case for rate cuts this year. The week, Carol, shaping up to be the best so far in 2024 for stocks.
I feel like we keep saying the highest yield of the year and the best. All right, so Abigail Doolittle, as we said, Bloomberg News chief markets correspondent right here in our Bloomberg Interactive Broker Studio. All right. You do look at trends.
Yes.
We're looking at the S&P up almost 3% for the week overall. That's a pop. Is that an anomaly after the trend or the downward trend that we've seen?
It doesn't really make a difference, frankly.
Really?
Yeah, on the daily chart, it really doesn't show up all that much, but on the weekly chart, it actually just looks much more bearish, and I can try to pull that up.
I'm like peeking, for those of you who can't see, I'm like peeking over.
For those of you on radio, you can
even-
feel left out because I feel left out right now.
I'm pulling it up now, so I will describe.
It's a 3% pop. It's a big pop.
So the weekly chart, the reason that it does not look, and where is my weekly chart? Here it is. So first of all, we have this uptrend that we've been talking about for quite some time out of the October lows. It started to reverse, as we've been talking about all week, very clearly starting in February, but there were a couple of weeks of near all-time highs. And now the candles that we have are super, super heavy, telling you that the sellers are just waiting to basically pounce. In addition, this week's candle is inside last week's candle. That means that this week's low and high are higher and lower, respectively, from last week's. This signals uncertainty. Typically, it also is ahead of a big move. Given the fact that the uptrend is broken and that I don't see the index hitting any levels of support, I would say that the trend is going to continue to the downside. The NASDAQ 100 chart looks even worse.
So
I mean, it's really just kind of almost looks like death.
So we kind of got oversold a little bit, right? And then we just bounced off that.
Yeah, exactly. A little bit of dip buying, encouraged by some of these big tech names that we've had this week that have come out a little bit better.
NASDAQ up 4%. Is it a different chart on the NASDAQ?
The NASDAQ chart's actually worse.
Or NASDAQ 100.
NASDAQ 100 weekly chart. I'm going to pull it up right now and see if I can try to describe why it's worse. The daily NASDAQ 100 chart, what makes it look really bad is it's been zigzagging through 100-day moving average support.
Right.
The last time it did that, it went back above it for a little bit and then very quickly down to the 200-day moving average. There's just a lot of uncertainty in these markets. The bearish divergences that we've talked about are really still coming to roost.
And this, you're talking about this all from a technical perspective.
Yes.
But I want to go to fundamentals because a lot of what we're seeing today is about fundamentals.
It
when it
is.
comes to Microsoft, when it comes specifically to Alphabet.
Oh, and I'm looking at this NASDAQ 100 chart. It's
Not
hideous. Honestly, it's awful. It's so bad. It's just like seeing it. Now, it could change, so something could happen next week where it all of a sudden changes, but it's basically just dangling. You have a massive area of price, basically last week and this week. It's just dangling. There's no support. There's nothing holding it up.
So
There's
just ready to fall to the downside.
just ready to fall basically down toward the 50-week moving average, which is the 200-day moving average. But in terms of the fundamentals, so this week, you had the relief around Tesla that Elon Musk is not folding in the towel, that he's still fighting for another day, and that caused that stock to go higher. And then, of course, Alphabet and Microsoft, better cloud, the AI is not weighing on them. Snap, decent after, a pretty bad year into it. So I would say overall, you have a lot of relief right now. In terms of if I were to do the NASDAQ 100, let's see, over the last 10 days, so let's put the